And there we go. Yo, what is up for y'all watching this on the YouTube replay? I have the craziest update ever for you guys. I mean, today's like literally the best day ever for me. I can't believe it. And I have so much to share with you. So this is going to be a good video. I mean, first off, AMD is doing really good. AMD is no longer Advanced Money Destroyer. They are advanced money duplicator. No, but seriously, AMD's been doing really good. Let's see what else is doing good today. Dave, Robinhood's up almost 4, Reddit, but the main winner is really my Moomoo account. And I'm going to wait a second for people to join in the live to share it. But yeah, here's also my main taxable account right here. We're up 0.63% on the day, not too shabby, but that's also an all-time high for me. So yeah, we're up 20% the past year and 12.35% year to date at a literal new all-time high in my main account. So all my accounts but one are at an all-time high. Same with the Roth IRA. Roth IRA is at an all-time high today. My main taxable account's at an all-time high today. So is the Moomoo portfolio, and so is the S&P 500. So if you just own the S&P 500 or pretty much any stocks, you got to be doing good. Every stock in here is up on the day. Wow, Constellation Energy really leading the gains, up 1.5% on the day. We're up 50. Here's my total percent change on every stock in here. So luckily we are up on every holding by a good chunk. And I just like having a concentrated portfolio of great high quality stocks that I can trust to just hold forever, even though they're going up quite a bit. But here's the best news today. I'll go ahead and share this, guys. This is what's crazy. If you look in the top right, today's P&L, we are up 8.43% on the day. Just an absolutely ridiculous return. And that's from Comfort Systems. Ticker symbol FIX right here with outstanding results. This stock is up 20% on the day, literally to a new all-time high. So this has been like my best stock ever. I'm super happy about that one. Another stock that reported earnings that I've kind of been talking about is ticker symbol Coca-Cola Consolidated. They're up 6.7% on the day. They were up 10% on the day, but they've given up some of the gains. But still, they've had a very nice past month there. So yeah, Coca-Cola Consolidated. And then there's another company that I own that reported earnings. And this is another one that led to a huge gain in my portfolio. This is ticker symbol URI, United Rentals. And here's my position. We're up. This is just crazy. Feels like just yesterday I bought this stock. We're up 41% on United Rentals, and the earnings weren't good. I actually just made a YouTube video about it. The earnings weren't good, but the stock is pretty much at an all-time high right now. I don't know why they're up so much, but yeah. That's what's up. And yo, what's up? Hope y'all are having a good Friday today. Yeah, if you guys got any stocks I'm going to look at, let me know. Can you believe this? The S&P 500 is up every single day this week. We're at over 5 green candles in a row. Actually, let me pull that up for you. So yeah, here's the top of the watch list. Comfort Systems up 20. Hey, Tesla's having a decent day. Data, Robinhood, Powell. But I wanted to find the S&P. Yeah, wow, look at this rally. Up 0.4% on the day. Literally, S&P is up 5 days in a row. 5 green candles, literally to a new all-time high. So yeah, yo, what up? Tio said, can you look at OYY stock? Not sure what that one is, but yeah, let's check it out. Wait, are you talking about this company right here? This is oh wait, what was the ticker symbol? I clicked out of it. OYY. Oh yeah, then we got to look at TSSI, bro. So this is what country is this? I don't even know, but the stock, yeah, look at that, at an all-time high. So congrats if you own this company. Prop next. Yo, what up, Plasma? Good to see you, brother. Yeah, we'll check them out. So this company is an agency services project marketing, huh? So revenue's down, but they are net income positive, but the net income did fall. Well, anyway, the stock is doing really good. Where are they headquartered? Because this isn't a U.S. stock. This is actually a Singapore stock. So just beware of that right there. So this is a company I just bought in my Roth IRA, TSSI, and they have had just a monster rally. So here, yeah, let me go to my Roth IRA right here. We're at $1,500 today, and one of our best performers have been TSSI. We are now up 38% on our shares, so really good stock price appreciation. And this is still a very small company. Look in the top right, you see market cap. That's how much the whole company is worth. Only a $718 million company still. And again, with these riskier kind of stocks, you don't want to have a huge chunk of your portfolio in them, but you're paying $700 million for a company that's 5x the revenue year over year. to 100 million of revenue this quarter. And on that 100 million, look at this net income. This is a $700 million company making a few million every quarter, and it's expected to keep on growing as well. So they made 3 mil the most recent quarter. So anyway, TSSI is one I really like. Low market cap, good industry, one that I like. How do you recommend finding what to invest in more? Yeah, hey, like really good high quality stocks, like I'm always doing my own research, but you, TSSI got a new COO. Yeah, TSSI is relatively new. And Orte said, would you buy Palantir? So I would. A great company, but not at this price because Palantir is pretty expensive right now. And they're kind of just at all-time highs because the whole market is. But this is one I would want exposure to. If they go down a little bit, I'd love to pick some shares up. Half the revenue actually comes from the government. Check this out. The government revenue's up 45% year over year. So some pretty ridiculous growth on the government revenue. Same with the commercial revenue. The commercial revenue's up 33. So both segments of business growing like crazy, making net income every quarter. Absolute fortress of a balance sheet, no debt. I think they have how much cash they got? Let's see. 5.43 billion of cash on hand with no debt, making net income every quarter. So they're just an innovative company, but the valuation's too high. Can't pay that ridiculous valuation. How much are you up total? Yeah, well, here's the crazy part. If you just today in this account, obviously we're up a crazy 8.6%. I haven't checked this. Wow. Year to date, we're up 41% on a return money weighted average, which is what you really want to look at. What about all time? All time in here, we are up. Actually, it's not going to load. Hold on. Well, let's see if it will. We're up 107%, and versus the S&P 500 up 52%. So yeah. Yo, what up, Aaron? He says, if you could only have one stock, what would it be? We'll look at CPRX, Aaron. I do own CPRX, but if I had to just pick one stock, first off, I'd pick the S&P 500, but I get that's not really a stock. But if I had to just pick a stock, I'd probably pick something safe like a McDonald's, maybe even Microsoft, something I know is going to be a good bet in the long, long run because even some popular names I don't know about 10 years down in the future, but I did want to look at CPRX for you. Oh, and then we'll look at ASML. Yeah, we're going to look at ASML or ASMC. We'll check these out too. And yeah, yo, what up, Jack FX? What's up, man? So here's CPRX. This is my only healthcare stock. So my only healthcare play. We are down on the position. Look, I bought the one at all-time highs and we're down like 5%, but I think they're going to continue to be a winner. Here's why. First off, no debt, literally debt-free company. And how much cash? I'll just be quick. 580 million of cash, no debt at all, and the whole company is worth 2.5 billion. And they're making a boatload of net income every quarter. Look at this, 50 million a quarter, 200 mil plus a year. The free cash flow is even better. So CPRX is a financials play. They're trading at I think like a 12 PE. When you remove the cash from their market cap, the X cash PE is it might even be 10. I mean, the valuation is so cheap there. So yeah. So let's go look at ASML too. So this company had some absolutely phenomenal earnings, but the guidance hurt them. They basically gave guidance of showing no growth for 2026. So or for the next trailing 12 months, which is why the stock got hit. But the actual earnings were the best ever. They've never had a better quarter. The revenue grew 35% and the net income grew 86%. So what does that mean in English? That means they're growing their net margin, record net margin, 35%. They have they're the lithography chip making manufacturer. Their main customers are Samsung, Intel, I think Nvidia. And I do like this one, but I am scared. That's kind of why the stock is selling off because of the future growth. What's the PE? Is it still fair? And yeah, 25 PE. Look, that's the lowest PE it's ever traded at. So that's interesting. Yeah. FIX, can you review it? So, hey, yeah, Kevin, if you go watch my most recent YouTube video, I just did a whole review on this company's earnings, but I'll keep it quick here. So this is my largest holding. They're up 21% on the day. They even beat my expectations. I literally don't believe it. So here's kind of why the stock did so good. The revenue grew 20%. And the net income grew 70%. And that wasn't some one-time adjustment. They really grew 72% after growing 92% the previous year. So outstanding results. over 10% net margin. Margin grew 43%. Look at this. So they're a mechanical business and they're in this electrical segment. And this electrical segment grew 50% year over year. This company has also increased their dividends for 4 quarters in a row. So normally you find companies that raise their dividend once a year. That's like what most companies do. But this company has risen their dividend for over 4 quarters in a row. So I love that company. But if you want to see more review on that one, Kevin, check out my most recent YouTube video. I literally made it the exact same time I started live streaming. So yeah, hey guys, best way to support me, go subscribe to my YouTube channel. It's called Nathan Robert. It's on the link tree in my bio too. Just type in YouTube Nathan Robert. What's the importance of PE? Yeah, the PE is just a net income multiple. So the company trades at a 10 PE. They're trading at 10 times net income. And actually, plus any stock buybacks or dilution, the PE does get affected by if they buy back their own stock or issue stock, because the same they could have the same amount of net income but issue more shares or buy back shares and give you more net income per share. Anyway, so let's go look at some more stocks here. Someone said, what do you think of AMD? Yeah, man. So check this out. If we go to our risk on portfolio today, AM Dizzle, dude, no longer stands for Advanced Money Destroyer. You know, this is Advanced Money Duplicator. And yo, Jace Love Snow, thank you so much for the rose, man, for the heart. Yeah, if you got another stock you want to look at, let me know. Yeah, we'll look at AMSC too. I think that's American Superconductor. But let me look at AMD first. So look at that new 50, or not a new 52-week high, new 7-month high on the stock. Since its April bottom, it's performed phenomenal. But, oh, we got to look at SoFi too. Yo, SoFi's crushing it. So anyway, here's what I love about AMD. I do own this one, so I might be biased. But check this out. Obviously, we know they sell GPUs. They have a 17% PC GPU market share, but AMD is really a data center play. Check this out. If we look at the data center revenue, it's up 57% from the previous year. I mean, that's some incredible growth. That's a company I can trust to hold on for the long run. And look at the also profits here, because I like looking at the free cash flow and the net income. You know, the free cash flow grew 91% year over year. Incredible. Net income grew 500% nearly to 700 mil. Look at this monster of a balance sheet. I mean, no net debt on this company. So yeah, for all the financial reasons, the growthy reasons, the earnings tailwind from being able to ship their chips to China again, I'm going to hold that one for the long run. Yo, Bob, what's up, brother? Good to see you. I'll check that stock out. Don't worry. We got like 2 or 3 to look at first, and then we'll check out ABAT. I got you. Yeah. We're going to look at Lockheed Martin too. American Superconductor is the one I want to look at right now, though. So check this out. American Superconductor. Look at that. It does pretty much, well, we'll ignore 2010 here, but they're at a decade high right now. So incredible results from this company. Let's see how they're doing. So yeah, wow. So the revenue, first off, this is what I love to see. Revenue's up 60% year over year. So revenue has grown very nicely. And on that, they actually made net income. So this is now a net income positive company, making a few mil of net income every quarter. They're deleveraging. Cash from operations is insane. Look at this. That's really good. So yeah, this is the free cash flow. I mean, the free cash flow's tripled. So it's up 171%. So yeah, they're beating expectations like crazy. So American Semiconductor is a cool one. They're on my watch list too. So I also wanted to pull up SoFi, Lockheed Martin, and ABAT. So we'll check those out. So I want to start with SoFi first, because this is another one I own here in my Webull risk on account. I don't have a huge position just because they're pretty risky. Honestly, I regret every share I've ever sold of SoFi. I only have 24 shares left, but here's why they deserve to be doing so good, and they deserve to be at this premium valuation, in my opinion. Here's why. I'll just show you the numbers for yourself. So obviously this is a fintech. They have their own banking charter, and most of the revenue comes from their financial services. And look at the growth here. So this is ridiculous. I mean, it's literally doubled, up 101% year over year. Kind of look at this on an annual basis. I mean, in 2020, for the full year, the revenue was 11 million. Now, just in the most recent quarter, it's 303 million. So phenomenal growth on SoFi, and their net income positive. So look at this. They have made net income every single quarter for the past year. You know, we zoom out to the previous year. Hey. All right. Thank you. All right. So sorry about that. Had to answer something. But anyway, yeah, SoFi, the growth is really strong here. So they used to lose net income every quarter. Now they're making net income every quarter. So yeah. All right, let's get back to the analysis here. So let's look at Lockheed Martin. This is your aerospace and defense company right here. And dang, Why did they? Oh, so they reported earnings and they're down on earnings. Actually, let me go do some analysis on this because that's a little weird. So the PE is, oh, the PE went up. That's not good. They must have lost net income. Did they really? Oh, just bare. Oh, so yeah, that I can see why the stock didn't do too good. The net income fell 79% year over year. That's really not good. So, yeah, the cash from operations fell 90%. Yeah, that's not great earnings from Lockheed Martin. And this is one I do like as like a dividend play. You get a 3% dividend yield. They're doing major buybacks, like major buybacks. But yeah, here's where the revenue comes from: aeronautics, rotary, mission, missiles, space industry. So that's what Lockheed Martin does. Dang, that actually isn't good earnings. I'd be careful to maybe add more there. So yeah, let's look at ABAT right here. So American Battery Technology. So yeah, this sector is like really strong right now, but this one looks like a micro cap. Yeah, like if you look in the top right, you see the market cap of 290 mil. So very, very small company. I don't usually like covering the super small ones because let's see here. Let's see. Yeah, the revenue was 900,000 the most recent quarter, and they lost 11 million. Actually, that's not good. They're losing 10 million a quarter, and the whole company's worth 290. So I'd be a little careful with ABAT, but they have had this incredible rally the past couple of days. Sure, there must have been some good news this day, maybe some partnership because the volume just like rocketed. So I do need more context behind that one. But anyway, those small market caps, I just try and stay away from. They're losing a lot of money. Working just fine. So, oh well. Yeah, hopefully that comes back. Okay. All right, so here's HSBC stock. So the stock is at an all-time high right now. So first off, congrats if you own this name because you got to be up on your position. What's the yield here? So yeah, these bank stocks usually have a pretty good yield, a 5.10% dividend. Do note they did cut their dividend in 2019, and now they've fully recovered it. Now it's higher than it was in 2019. So let's go check out the net income on this company. So yeah, so corporate institutional banking, they're in Hong Kong, international wealth. So they're yeah, internationally diverse. Yeah, look at that. So only 6% of the revenue comes from the US. So yeah, so look at the net income. Wow. So they made 7.5 billion in net income just in this quarter. So that's how they can afford the dividend. So let's keep going here. Yeah, hey, try not to spam. I want to get to all the stocks here. So someone said XERS, so Xeris Pharmaceuticals. So yeah, I don't like to cover these $800 million companies. So, but they've had a nice little rally here. But let's see, $800 million market cap they own. So Ricolev. Oh yeah, I've looked at this stock before actually. So actually, yeah, this is some phenomenal growth. Actually, look at that. Their revenue's up 140% year over year on their Ricolev. These are like little prescriptions. Gvoke, whatever, is up 25%. So some actually really solid sales growth. I love that actually. So revenue's up 50%. Dang, but they're still losing net income and they have more liabilities than assets. They're actually more leveraged than they were a year ago. But the kind of saving grace here is the growth of the business. As long as they can continue, I think, as long as they can continue this huge Ricolev revenue, whatever, I think they'll end up being fine. So as long as the growth stays, I actually like that name. Hey, thanks, man. Thanks for the subscribe, Lord. Yeah, I'm trying to build up the YouTube channel. Yeah, if y'all want to support me, make sure to check out my YouTube channel. It's called Nathan Roberts. I'm streaming on there too. So hey, yo, what up? Abid, what's up, man? How's it going? Hope you're having a good Friday, everyone. So here's Crocs. Anyone heard of Crocs, like the little shoes? Well, they're actually a publicly traded stock, and they sell a commodity. They sell shoes, and because of that, they trade at a stupid low valuation. So look at this. The PE is a 6.6 versus the industry average of a 26. So they're super low PE. Yeah, look at that. They own Crocs and Hey Dude. They actually acquired Hey Dude, and it's actually not been performing too well. Yeah, look at that. Since 2022, the revenue's down like 20% plus. So no growth on the Hey Dude brand, which doesn't help the PE. And yeah, the Crocs brand is only up 2.3% year over year. So I would like to see the growth kind of come back because, yeah, the revenue was actually negative year over year. But this net income's like so good. I mean, they're printed money. I mean, if they're probably buying back their own stock like crazy. That's what they should be doing. I mean, look at this. They're making 200 plus million every single quarter of net income. Incredible. So that's the one good part there. They can buy back all their shares like in like 7 years. I mean, that's incredible. So they're really cool. Hey, what up, Applesauce? Good to see you, man. Check out LIDR. Hey, what's this one? So LIDAR. They're wow, they're up crazy today. Uh, yeah, what's the market? Yeah, 88 million. So yeah, there must be some good news there. That's crazy. Um, so let's keep going here. Let's see. TXN dipped. Yeah, Texas Instruments. This isn't one I've really liked. I mean, I actually saw this coming almost because if we go to the financials right here, the financials aren't good. Like actually check this out right here. If we go to the net income did come back, but the company's been struggling since 2022. Look at that. They had like 5 billion plus of revenue. Then it collapsed in 2023 and it's starting to, you know, grow but from the bottom. So anyway, nothing really blowing me away here. The net income fell even more. Look at that. It fell 30% from the peak. So it's trying to get back to where what anyway, Texas Instruments, their dividend payout ratio is really hurting them. Their payout ratio is so high. They have like no leftover room to reinvest in the business organically. They have to dilute you and stuff. So yeah, well let's check out CCEC. Capital Clean Energy Centers. So I wonder if they own like a nuclear reactor. I don't know, but let's see where the revenue. Well, actually, I guess we can go to the profile really quick. So they own and seaborne transportation of natural gas, cargonized. Wait, was that the word? Cargoanized? That's funny. Containerized goods. Okay. So let's see here. It's a small company, but let's analyze them anyway. So yeah, look at that net income. This is great news. They're making a boatload of net income every quarter. Net income's more than doubled since the previous year. So yeah, that's really good. Revenue's up 43, net income's up 140. So what's the net margin? Wow, 73% net margin. I mean, that's redonkulous. So hey, that's interesting. I wonder what the dividend is there. Up all-time high today. Yo, in the outer edge, that's awesome, man. Yeah, the S&P 500's at an all-time high today. Um, the S&P's actually been up every day this week. So today's Friday, obviously, but since Monday, the S&P 500 has been up every single day this week. I just never, who would have expected that? I mean, market's been crazy, but yeah, we're up 0.72% today in our main account right here. Let's see how the market's doing really quickly, then we'll get back to the analysis. Yeah, Meta, Google, everything's green. McDonald's just barely green. How's the Roth IRA doing? So, we just bought these three really risky stocks in my Roth IRA, TSSI, DCTH, GHM. And look at InnoData. Hey, for y'all OG InnoData fans, I mean, InnoData's been crushing it today, up 5%. Anyway, let's keep going here. FIX killed it today in earnings. Yeah, Tom, no kidding. I'm up. This is like, today's the best day ever for me because of them. We're up 8.72% in here. Just ridiculous. So, yeah. All right, let's keep going here. Palantir, we already looked at Palantir, but we'll look at Palantir again because Pinky's here. So Pinky has been holding Palantir since $40. I mean, that's crazy. I mean, let's go see how they're doing. So obviously they're at an all-time high today just because the market is. Palantir, most of the revenue comes from the government. The valuation's too high for me to buy them. One day, maybe it'll take 5 or 10 years, but Pinky, one day you're going to get a dividend on this company. And when they start paying a dividend, like the yield at the time will be like a 0.5%, but you're going to have like a 3 or 4% dividend yield on cost. So here's the government. I wouldn't buy this one at all-time highs, but look at the government revenue here. This is why they're at all-time highs. I mean, they're up 45% year over year. Very good growth on the government revenue and commercial side. Commercial revenue is up 33% year over year. So all segments are growing. Net income's growing. Absolute, fortress of a balance sheet. No debt. $6 billion of cash. Yeah, what up, Jack? Yeah, InnoData's been going crazy. Can you explain if you're buying into a stock, what are you looking in a company? Yeah, I'm looking for good fundamentals, good financials, Bama. And here are the stocks that I think have good fundamentals, and they've been performing very well. And I just saw someone say Amazon. Yo, actually, and Enphase Energy. You know what? Let's look at Enphase, actually. So this is a solar stock that they're really hurting because part of a long time ago, there was this like Inflation Reduction Act bill, and it gave so much incentives for solar. And now those solar credits are going away and they're actually going to nuclear. So nuclear is getting a bunch of credits. So anyway, that's what sucks about the solar industry. So Enphase makes the little AC to DC inverter. So this is your solar panel inverter play. And let's see, are they back to net? Yeah, so actually, here's the good news. They are making a good amount of net income, but yeah, it is still down bad. Like 20, this is when I was buying the stock and I sold out of it for a big loss. But yeah, they used to make like over 150 million. Then the net income went negative, and now it's back to net income positive, but not as much. So still, it's dang, the cash flow fell 80%. It's tough with Enphase, but I think the risk to reward is starting to look pretty fair on Enphase Energy. So yeah. All right, let's see here. Salesforce is one of the stocks I'm loading up on. Yeah, we can look at Salesforce. This is a software play. Unfortunately, software it's been kind of lagging. ServiceNow, Salesforce, Adobe, they've been struggling with these PEs. Yeah, hey, never sell. And yeah, then we'll look at Fubo too. So here's Salesforce. This app is telling me that there's a bearish flag. But that's technical analysis. I like looking at the fundamentals here. And I think why the stock is kind of sold off from this peak is because the growth has slowed a little bit, which isn't great. But they did just acquire Infa. I'll look at that stock after this. But yeah, if we look at the net income, their after-tax net income only grew by 0.5% year over year. So the net income grew by 0.5 and the free cash flow grew by 3.5. So, low single-digit growth there. But yeah, I still like this company. They're number one CRM play. They own Slack. I mean, what an incredible asset. They also just acquired, it was INFA, I believe. Informatica, yeah. So that's why the stock looks flat. They got acquired at $25 a share, and this is going to be added to Salesforce. This company makes $400 million of revenue a quarter, and then that'll get now added to all of Salesforce's. So that'll be some inorganic growth, but yeah. So Fubo TV, this company's kind of just in the hands of Disney at this point because they just got a huge chunk of cash from Disney actually. But yeah, Fubo, 70% of the shares are owned and controlled, the voting shares by Disney. So, it's kind of just whatever Disney wants to do with this asset. They're kind of making yeah, so if we look at the net income, that 188 million they made was from the Disney payment. But yeah, I don't see too much interest in them at the time. I don't know how much more they can really go up, but my side of the bet is Disney. I got 15 shares of Disney, so I do have some exposure to Fubo TV through Disney stock. They've been performing pretty good the past couple months because of the streaming service business. Disney's really got their streaming services profitable. They own ESPN, they own Hulu, Disney Plus, obviously. So and now Fubo. So what do you think of HBAR? Yeah, is that Hedera? Yeah, that's a crypto. I don't really got much thoughts on them. So yeah, let's see how they've been performing though. Hey, look at that. 25 cents a share. I don't own any crypto, by the way. So MARA. So here's another kind of crypto stock. And here's what's unfortunate. So I'm pretty sure Marathon Holdings just mines Bitcoin. This is a Bitcoin mining company. But if you look at the stock price, they're nowhere near all-time highs. Bitcoin is literally 1 or 2% off all-time highs. This is well off all-time highs. So that's kind of the unfortunate thing here. So yeah, I don't know. Nothing's really wanting me to buy there. Yo, Chiro said, check out POW stock. They own Wealth Simple. Huh. Wait, let me know. Are you talking about Power Corporation of Canada? You must be. So yeah, look at that. The stock's at an all-time high. Wow. So really good stock price appreciation. 4% dividend on them. So we'll switch the revenue from Canadian to US dollars just so we can better understand. So yeah, look at that. PE is a 13. Lifeco is most of their revenue. Hey, I don't know what that is, but let's see. Revenue of $6 billion, and yeah, they're making like 800 million of net income a quarter. Yeah, if you kind of average it out there, 6 to 800 mil of net income a quarter. So yeah, they're super low valuation, nice dividend, low payout ratio. So yeah, they're interesting. Let's see. Barella, what's up, man? Barella said GTLB, and here we'll look at DOCN. So this is DigitalOcean. This is a cybersecurity play, and my cousin actually uses this application, and he told me about this stock. But unfortunately, the stock has not done too good. They're kind of close to an all-time low. And it's weird because the company's financials are at like their all-time best. I mean, if you go to the revenue, the growth has accelerated. It's up 14%. It's the highest growth rate for the entire year. So revenue's up 14% year over year. And look at this net income. They're making net income every single quarter, and they're growing their margins too. Yeah, an 18% net margin. Everything they're doing is headed in the right direction. It says their balance sheet, they've actually deleveraged, which is good, but their balance sheet doesn't look great because all their assets that they get, like cash, they spend on stock buybacks. So if you go look at the stock buybacks on DigitalOcean, it's really impressive. So CRS Steel Company, huh? Is that the ticker symbol? Are they called Carpenter Technology? I don't know. Specialty alloys. Yeah, this is probably it. So yeah, wow, look at that. Stock is at an all-time high right now. So this is, I guess, exposure to the steel industry. Let's see, actually. So specialty alloys, performance engineer. Well, let's see. Specialty alloy operations is up 6% year over year. What about net income? So yeah, wow, look at that. They're pretty much making 100 million of net income a quarter, and it's really grown. So hey, looks like they're growing their margins. Good news for them. So yeah, out of all the steel stocks I've looked at, that looks like one of the better ones. Would you buy United Healthcare? So let's actually check them out. So it's actually worth a nibble. Not a full-size position, but I do think that United Healthcare might be worth a nibble, like a quarter of a position or something. You don't want to go all in on this stock just because the regulation is not in their favor right now. If they get accused of fraud, they'll get kicked out of Medicare and Medicaid for 5 years, and that's like half their revenue. So yeah, that's not good. But for right now, if they end up don't getting accused of fraud and everything just stays the same, this is an incredible company at an incredible valuation. 3% dividend yield here. The PE is now an 11 because the uncertainty of the future and what the net income is going to do. But yeah, if we go to we're also a customer. We use the OptumRx business, and look at that. OptumRx revenue for the full year of 2024 was up 15% to a new record. So United Healthcare, I think it's worth a nibble. Not a huge position though. Hey, again, nothing in this is financial advice. I'm just a college student. I'm not an expert. Had my first day of college yesterday, actually. Let's see. MRVL. What up, Sunflower? So MRVL, Marvel Technology. So this is like a chip play, I believe, and they're finally making net income, and that's the good news because they pay a dividend, a very small dividend, but the payout ratio says it's negative because they just went net income positive. So they needed that too. So if we go to the net income down here, look at them, the two most recent quarters. They made 200 million, 180 million, and then look at all the quarters before. They used to burn money hand over fist, losing a couple hundred million every quarter. So finally they're net income positive, and the future is going to look bright for them. So that's what I can't wait about. Yeah. What are you studying? Finance. Right now I'm taking accounting 1. And I'm majoring in business admin. So option play maybe? Yeah. So let's see. What do you think of Intel? So I don't love Intel, and they've been a terrible performing stock. So I feel bad if you own this one. Intel is literally the same price that it was back in 1998. So not good. And dang, they're down 9% on the day. So let's see if we can figure out. Oh, they had earnings. So let's go look at the earnings. So they beat on revenue by a really good chunk. So they beat on revenue, but lost so much money. There's no way. We're about to go check how much net income they lost. This is not good. Dude, no. So yeah, they lost $3 billion of net income. What about the free cash flow? Yeah, look at this. They're losing a couple billion of free cash flow every quarter. They're losing a boatload of net income. I mean, how is that possible? They lost 17 billion that one quarter. So anyway, Intel's in a rough spot. Cash from operations down. So yeah, nothing's really blowing me away on Intel. They're kind of getting their lunch taken away. But maybe the U.S. can save them with stimulus. I want to buy Intel, but it keeps going down. Yeah, applesauce. That sucks. What do you think of? All right, what up, user? He said TNMG. So hopefully this isn't a micro cap. TNMG. So TNL. Yeah, so we're not even going to cover this company. So the stock's at an all-time low, and the company's worth $13 million. So yeah, be really careful with that one. I don't know about that one. So Intel has a new CEO. Hey, that's good. HLX, Helix Energy. What's this one? Helix Energy Solutions. Then I want to quickly check on how the market's doing. So yeah, I have another really small one, but this one's decent, a $900 million market cap, and they have a positive PE, which means they're making net income. And if I had to guess, yeah, this one's in the oil and gas industry or something like that. We'll find out. So well intervention, hey, robotics. How's the robotics business doing? Hey, it's like 50 mil a quarter. That's actually not too shabby. But well intervention down 6%. What about net income? So that's probably why the stock has fallen more than it probably should have. The net income actually went negative. So they lost 2.6 million of net income. So that's not good. Yeah, revenue's down 17. So we want to see the net income go back to positive, but and the cash flow is negative. So that's why the stock is hurt so much right now. So let's see here. Thoughts on Grab? Yo, Ivy. So I love this company. This is an Uber clone. So basically, this does exactly what Uber does. So Grab does exactly what Uber does, but in all these other countries, notice US and Canada aren't on here, Indonesia, Singapore, all these other countries. So they've attracted so much attention that actually Uber is now the largest shareholder. So look at that. Uber owns 13% of all the shares of Grab. It was genius. It gave Uber instant international diversification. Look, Didi owns 3%. Toyota Motors owns 5.5%. So yeah, really solid balance sheet. No net debt on this company. Getting net income positive. Printed free cash flow. So yeah, I think that was genius. And they're kind of backed by Uber now and a lot of other popular ones. So do you ever look at technicals chart patterns? Sometimes, but not much. I love looking at the financials because it's arguably more important than the chart pattern, depending on your strategy. For me, just buying and holding for the long run. So GRRR, what is that? Oh yeah, so this isn't a company I don't know anything about this company. I just know they're a $400 million market cap with a lot of momentum. Let's see, security convergence. Okay, let's see. Revenue of 18 mil, not great, and they lost 5 mil. So I don't know, man. There's not much revenue behind this company. I mean, they didn't report earnings the past 2 quarters. This is weird, man. I don't know about that. I'd be careful with that one. But I know they're a huge momentum name. Should have bought FIX before. Yeah, hey, what's up, Dat One, dude? Man, this is my best performing stock. I mean, I can't believe it. We're up 86% on them and up $1,400 today. So crazy new all-time high. Actually, let me check on the markets real quick and we'll get back to the analysis. So InnoData's up 5% now. Let's go. And every stock in here is up on the day. Yo, the S&P 500 has been up 5 days in a row. Can y'all believe it? 5 candlesticks in a row have all been green. So for the entire week, S&P has been green every day. Pretty crazy. All right, so let's see. Are you in UNH? I just got some. I am not in UNH. We actually just went over them like 3 minutes ago, but I'll check them out. Like, what's up, Francisco? I think UNH is definitely worth a nibble down here. Yo, what up, Nathco? What's up, dude? Good to see you. And yeah, we'll look at what is this? ANAB. What's this company? So Anaptys Bio. So a biopharmaceutical play. These are so volatile. Let's check them out though. So research and development. So they have a little bit of revenue. Yeah, look at that. Actually, it's grown like crazy. Actually, this is great news. Revenue's up 286% year over year, and they're still losing a lot of money. That's the bad news. For 40 million so they lost 5% of the whole market cap just in the most recent quarter. So they need to narrow those net income losses. But the real good news here is like the revenue growth. I mean, it's up 300%. They did leverage up a little, but they're interesting. Might be worth a small little allocation. I don't know. Well, yeah, hey, 1X. This is actually a brokerage right here. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. And also another, FIX did really good. Another company that had just outstanding earnings was APH. And the candle looked weird. Actually, look at them on the past 5 days. They reported earnings, went up, fell down to $95, fell 10%, but now it's all the way back to 105. So it was a weird little dip there, but they've recovered. So Amphenol Group had outstanding results, arguably better than Comfort Systems. I'm surprised Amphenol isn't up more. So let's keep going here. Oh, Netflix stock. Let's check them out. Yeah, I love Netflix stock. So Dang, yo, hey, Nateco, give me the ticker symbol for that stock, and we'll check them out for you. Or Nateco. So here's Netflix right here. They have had a little downtrend. I think the earnings were phenomenal, by the way. Absolutely phenomenal earnings, but I think the PE just needed to go a bit lower. I mean, the PE is still a 50. Even after this little dip, the PE is a 50, which is a bit high. So they would literally have to double right now's net income for it to be like somewhat reasonable by 2031. So anyway, the net income, crazy growth. So that's why they deserve the hype. I mean, net income grew 45% after going 45% the previous year. I mean, incredible net income growth. Revenue's up 15. Dang. So they really grew their net margin, 29% net margin. Cash flows up 87% year over year. Incredible. Premium subscribers are 301 mil. Average monthly revenue per membership is $11.69. So Netflix is just a winner, but valuation's a little high. I'd love to own them. What are your opinion on financial manager and stocks? I don't know. What do you mean? Hey, look, I'm not an expert. I don't sell anything. I don't have a course, a book, a Discord, nothing. I'm not a financial advisor. I'm not an expert. I'm just on here giving my opinion. So, hey, if y'all want to help me out, though, make sure to hit the follow button. Best way to support me, the only way to support me really, is to check out my YouTube channel. It's called Nathan Robert. I'm streaming on there as well. Or let's see, what are your thoughts on Coin? What up, James? So yeah, XRP and Coinbase. So yeah, Coinbase, this company has been performing like crazy ever since the stable coin bill news, the Genius Act, all that. There's favorable regulation for crypto and stable coins. So that's the good news for Coinbase. And also look at Coinbase right here. This is a really good stat. I love these stats right here. Look at this. Monthly transacting users is 9.7 million. So a lot of people on this, and look at the net income. So you have to kind of average it out here, but they're making literally a couple hundred million of net income every quarter. So net income on Coinbase is very strong. And same with the cash flow. So yeah. IBM earnings, but it fell. Oh yeah, we got to look at Oscar Health too. Remind me to look at them. And Figma, I want to look at these stocks. So here's IBM. Yeah, they had a nice little gap down on earnings there. Let's see what they reported. So they beat on revenue, they beat on net income, and beat on EBITDA just slightly. But the stock is still down. So that's a little weird. Yeah, revenue's up 8%, net income's up 20. So they must have had some bad guidance or something. Maybe they said something that investors didn't like. They have a nice little dividend there, like a 3% dividend yield there. So yeah, someone said, what app is this? Yeah, hey, if you go to the link tree in my bio, it's the very first link there. It's actually a brokerage, this app I'm on. So yeah, first link there. Suggestions for a small account. Hey, yeah, just if you have a large or small account, just stick to like a strategy, like buy and hold great companies for the long run. Companies and trust. Like first off, the S&P 500, but then buy some stocks and use. Like maybe, like I own Amazon. I use Amazon. I use Adobe. I use Google. I use McDonald's, Meta. So yeah, Netflix did do good, the earnings, but market's not too happy. Let me pull up Oscar Health, OSCR. So yeah, this is another Medicare, Medicaid stock that has really been taking market share. They've had some phenomenal growth here. So the reason the stock is gapped down on this day, there was no earnings, but there was unfavorable regulation toward them and kind of the whole industry. I mean, you can look at United Health and CNC. But here's why if I was going to pick between all of them, I'd probably pick a UNH or an Oscar Health because of the growth of the financial services. Yeah, if we click on United Health, Oscar Health right here and look at the annual revenue. I mean, this is ridiculous. I mean, look at this. The revenue was 500 million for the full year 2019. And now for the full year 2024, the revenue was 9.2 billion. I mean, just ridiculous growth there. And net income, 275 million. But again, the stock's fallen because the future's a bit uncertain, but everything that I'm seeing right now looks great. So yeah, just know it's the industry's not favored right now in regulation. So you're holding Adobe with Figma coming out. Oh yeah, that's what people were talking about. Have they IPO'd yet? And I actually, hey, I don't own Adobe, so I don't own them, but I do use them. I'm on Photoshop, After Effects every day. So yeah, Figma. This is another it says browser-based photo editing software Never heard of them, but yeah, they're gonna IPO soon. Let's see, what is this one? PPTA. Yeah, hey dude, try not to spam, man. But let's check this one out. Perpetua Perpetua Resources. Okay, $1.7 billion company. Look at that. Stock's close to an all-time high. They are down 5% on the day. Yeah, the PE is a 16. Or no, that's the price to book. What's the PE? PE's negative, so they lose money. Dang, there's no, wait, hold on. This is a startup actually. Look, so if we click on revenue, it says, wait, hey, Nathco, you're not seeing the link in the chat? If you go to the description of the video, Nathco, if you should be, it should be the first link in the description as well. But yeah, what's up, Nathan? But yeah, there's no revenue data here, so this company doesn't sell anything. They don't sell a product or a service, and they're losing a bit of net income every quarter. Luckily, they can afford this because they have a absolute monster of a balance sheet, no debt, lots of cash. But they need to finally start making some revenue. All right, so let's see. Thoughts on GE stock? Yeah, dude, GE Aerospace, ever since the spinoff, man, this has been an incredible performer. They can really focus on their margins. So, yeah, commercial engine repair and servicing is what they mainly do. Then they're in the defense industry, that's up 6% year over year. Commercial engine repairs up 30% year over year. Incredible growth. So yeah, if we go to this right here, the revenue's up 21 and the net income's up 59. So what does that mean? Again, company growing their net margin to an 18% net margin. So yeah, incredible. So yeah, hey. Hey, YK, this is a brokerage right here. If you want to get it, Linktree in bio, first link. This brokerage I'm on is called Moomoo. So anyway, let's keep going. Yeah, it's my favorite app to do analysis on, like let's look at Dutch Bros right here. Yeah, I'll show you. Let's go look at Dutch Bros. It's a free app, free brokerage. But anyway, let's keep going here. So dang, Dutch Bros hasn't had a great candlestick yesterday. So I do wonder what happened with them. Yeah, look at that candlestick yesterday. Not great. So let's anyway go back to here. So yeah, they're kind of like a Starbucks. And look at this, 91% of the revenue comes from their company-operated shops. And check this out, very strong growth. The revenue's up 32%. And for a restaurant in this environment to be growing like that, that's really impressive actually. So also, we can see just the net income down here. They're making net income every quarter. 22 million the most recent quarter, a couple million. So another stock kind of similar to that. There's also SHAK, Shake Shack. Anyone know they were publicly traded? Shake Shack's actually been doing all right. I mean, they're kind of the same price as they were back in 2021. So, all right, let's keep going here. PWR Quanta. What is that? So, this one's on my watch list actually. Okay. Actually, I know this company. This has been an incredible performer. Look at that. They're up 3% on the day. So, incredible performing stock right here. So, yeah, they're in electric industry and underground infrastructure. So, yeah, that's interesting. Let's check out the financials right here. So, yeah, look at this net income. I mean, it's up like crazy since the previous year. So, yeah, revenue's up 23. Net income's up 18. I mean, this is really good net income right here. So I can see why this stock has done so good. And what's the PE ratio? And PE's a 68. Okay, so a bit of a high PE, but hey, maybe they deserve it for growing so much. So yeah, I don't know if I'd buy that one at all-time highs, but they do look interesting. Have you used Simply? I have not, Jack. And QBTS, that's one of the quantum stocks. Let me pull up. Actually, they might have removed the quantum watch list actually. Anyway, actually, but we can see these other things right here, like these super investors portfolio. Soros Holdings. I've actually never looked at this. What does he hold? VeriSign, Meta, Netflix, PAC. I might check some of these stocks out. PAC, Casey's General Stores. Wow, look at that stock at an all-time high. That's pretty cool. But anyway, let's go back to the analysis here. Let's pull up Qubit. So this isn't a company I really would buy. The market cap is ridiculous. Like for what the financials are, the market cap, like in my opinion, this is extremely overvalued and not one I would personally own or buy. But that being said, it will still probably momentum higher. The quantum stocks have been so momentum. I mean, yeah, so we can just see. Also, they beat expectations, but again, what's the market cap? I think it's like close to 10 bill. Or no, 6.4 billion. So this is a $6.4 billion company for a company that made 15 million of revenue this quarter. So it's tough, in my opinion, to buy this one. They did just fortify their balance sheet by issuing some shares, but yeah. So let's see. Um, IONQ for quantum. IONQ also is really overvalued in terms of market cap. Like I think the revenue like went negative, or let me actually check. Uh, yeah, revenue is down year over year by 0.21%. They're still losing a lot of net income. So yeah, this is for what's the market cap? 12 billion. This is double the size of Qubits, and the revenue is 7 mil. The revenue at the other company was higher. Luckily, they have a really good balance sheet, but man, the valuations are actually ridiculous. If I want exposure to quantum, I'm just gonna buy Google or an IBM or an Oracle. Companies that have the money and the talent to be the industry leaders. Though they're not a pure play, the valuations actually make sense. Let's see. Thoughts on Palantir? Yeah, we already looked at Palantir, but I'll be quick about it and we'll look at them again. Hey, what up, Joanne? Thanks for the follow. Yeah, if y'all wanted the follow button, we go live every day. I don't sell nothing, no course, book, nothing like that. Just on your give my opinion. And hey, S&P 500's been up every day this week, and so is I guess Palantir. They're at a new all-time high. Palantir's up 2.6% on the day. The valuation's a little high. The price to sales ratio, so not the price to net income, but the price to the total sales is 120. So they're trading at 120 times the revenue. Not great, but really overvalued. But anyway, this is why they might deserve a high valuation. I don't think they deserve this high of a valuation, but look, half the revenue comes from the government, and the government revenue, like a lot of police stations are using Palantir's software, and it's up 45% year over year. So incredible growth on the government revenue. Same with the commercial revenue, up 33% year over year. And they're making net income every quarter. They have no debt at all, literally debt-free company, like $6 billion of cash. But yeah, I have 3K in Palantir puts from, oh, hey, Burner, man, good luck with that one, brother. I wish you luck. But yeah, hey, I guess it kind of makes sense to short something, high momentum, overvalued. I get the thesis there. M said UiPath. You know what? Thank you for bringing that one up, because I got to show you that's my biggest loser. So we're actually down 41% on UiPath. This isn't a company I'd recommend. I don't see this one really going up much more, sadly. Right here, the CEO quit out of nowhere, left the management for dead. I mean, this was not good. But here's why I can't sell them. Here's why I'm not selling out of UiPath, because the valuation is too cheap. Like if you look in the top right, you see the market cap, $6.6 billion market cap. So remember that the whole company is worth $6.6 billion, and they have $1.56 billion in cash with no debt. So yeah, if we go to total debt, zero debt. So $6 billion company, $1.5 billion in cash, and they're starting to up the buybacks. Look at that. They're spending like $200 million each, the two most recent quarters, just buying back their own stock. So still though, revenue slowed. Revenue's up 6% year over year. I mean, come on, in low single digits. So I mean, anyway, I wouldn't buy UiPath, but I just like being transparent. Look, those are my big losers. So yeah. Zoom is dead. Yeah, man. Zoom's another one with a bunch of cash and no debt. I bought Zoom, how many years ago? Like 3 years ago? Like I have to zoom out just to find my cost basis on this stock. But let's see. It should load where's the blue line? Blue line? Hello? Okay, I guess it doesn't want to load, but that's all right. Let me see if I can pull it up again. Yeah, there's the blue line. Look, it's been 1, 2, 3, 4, it's been nearly 4 years. Oh, there was my buy positions. January 2022. So yeah, it's been a long time since I've touched Zoom. Haven't bought really any shares since. Anyway, let's keep going here. Someone said UNP. So hey, those are the railroad stocks. So yeah, if you're looking for exposure to the railroad industry, Union Pacific is one of the best plays. And you get a nice dividend, a 2.4% dividend. They buy back like 2% plus of the stock a year. So again, like 4% of your money back a year just in net income returns. And here's the net income they're making: 1.6, 1.8 billion of net income a quarter. Their income is so predictable that they can get debt at a really low interest rate. So this leverage doesn't really bother me because it's the railroad. So yeah, Union Pacific, I like them. But probably won't outperform the market in the long run. But that's your railroad play. Let's see. Thoughts on Centene? Is that CNC? Centene. So yeah, hey, this is like the next United Healthcare. So yeah, this company just tanked. And look at that, they fell this huge candlestick and then just continued to fall the next couple of days here, which is a bit weird. Let's see, what is this? Article up here. Centene executives say expect to deliver margin improvement in all three lines of business in 2026. Hey, well, that's good news. Maybe that's why they're up 5%. But yeah, the Medicare and Medicaid stocks have been getting smoked. I mean, look at that. 56% of the revenue comes from Medicaid, and then Medicare is 18%. So, then they have some commercial revenue. But yeah, the future's uncertain. I think it's worth a nibble, kind of like United Healthcare. I do think it's worth a small nibble here. But the regulation is not in their favor, and regulation wants to eat their profits. So someone said thoughts on ARKK. Yeah, hey, that's Kathy Wood's ETF. Here's Kathy Wood's portfolio. Here's the ARKK ETF. So, Coinbase, Roblox, Robinhood, Tesla, Palantir, Shopify. Oh, she owns some Circle. Hey, honestly, Shopify is a really cool stock, in my opinion, with major growth. I mean, if we just look at Shopify in their annual revenue, this is what I don't believe and why I love Shopify so much. Look at this annual revenue. It literally just hits a new record every year. I mean, we go back to 2019, revenue was 1.5 bill. Now it's 8.9 billion. So incredible growth there on Shopify. So just in terms of revenue. And I didn't show the free cash flow or anything, but the free cash flow has been really good. But look at this. For the past year, her portfolio has done very well against the S&P 500, especially since its April bottom. But if you go to the past 5 years, yeah, so that's she's down by 40% she's down 26 versus the S&P up 43. So Kathy Wood, her risk on trades are doing pretty good right now. So yeah, thoughts on Opendoor. Yo, what up, Fountain? So Opendoor is one I would avoid. There were basically some activists coming out and saying this is a 80x stock or, some ridiculous stuff. And I don't think so. This company's kind of begging for low interest rate environments. But here's why I don't like them. If we look at the net income right here, they're losing like nearly 100 mil a quarter, we'll just call it 90 mil. So they're losing 90 mil a quarter. The whole company is worth 1.75 billion. And they're really, before this huge rally, they were worth like 1 billion. So, it's tough, man. This company has a real bankruptcy risk. Like that's why the stock was 58 cents before. The company's financials implied that this company is going to go bankrupt. So unless something like really fundamentally changes, I don't know if that stock price appreciation is justified. I don't know from a fundamentals point of view, XYZ stock. Yeah, hey, XYZ just got added into the S&P 500. So if you're wondering what's up with this huge gap up here on no earnings, that's actually the news that they're now added into the S&P 500. So if you own the S&P 500, you do own a little bit of the stock, and that's good news for this company. There's going to be passive flows now coming into this stock every month. A lot of institutions can now buy it. But if you're wondering what is XYZ, well, this is the company that owns Cash App. Look at that. They own Square as well, but 67% of the revenue comes from Cash App. And if we go to the net income down here, they're making a few hundred mil a quarter. So they're actually really profitable. Kind of like a PayPal. PayPal owns Venmo. So yeah, they're interesting. Oh, yo, how did you learn? No, but just want to go to real stock. Yeah, what up, Anthony? Yeah, I've just been investing since 2021, and I've just done a bunch of research. I read books, I watch other people's YouTube videos, and just do research for myself. I learn about what the companies do. And I just have a simple but boring strategy. I mainly just buy stocks for the long run and just hold it. Just hold great high quality companies. Why trade them for cash? Anyway. So yeah, here's our portfolio. Yeah, we're up 12% year to date, but here's a company that is not doing too good. And Anthony, if you go to the link tree in my bio, all the apps are linked there. This is actually a brokerage that I'm on right here. So if you want to get this brokerage that I'm on right now, it's the first link in the link tree in my bio. If you want to get this app, yeah, it's free. This right here is my favorite app for analysis. So let's go analyze Chipotle. Has anyone heard of Chipotle? It's kind of like a healthy like restaurant where you can like make your own burritos and stuff. So the revenue showed some slow growth and the margins kind of collapsed. That's so the stock is down obviously 10% on earnings, and here's why. So revenue's up 3, so the revenue grew 3%, but the net income is down 4%. So their margins did fall. Now, margins fell 7%, which isn't great, but still, this is still an extremely profitable company, making nearly 400 mil plus of net income every quarter. The balance sheet did leverage up a slight bit, but I, I can see why the stock is down. I mean, the restaurants are kind of struggling a little bit right now. So, all right, let's see. Is ASMC a good buy now? So I don't think it's a good buy now, but they're on my watch list as well. They're one of the most recent stocks I've added to my watch list. So yeah, they're pretty much at an all-time or decade high stock price right now. But let's see. Yeah, the market cap is still 1.8 billion. So I feel like there's could be more upside. You know, only a 1.8 billion dollar company for a stock that's grown their revenue 58% year over year. They're now making net income every quarter. Really good balance sheet. Really good. The cash from operations is up 200%. So really good AMSC earnings there. I can see why they're doing so good. Yeah, Chip. Hey, that's what's up, Fountain. Yeah. Um. Let's see. What is this stock? Or BBAI. Yo, this company I don't really recommend. I don't even know what they do. Anyone know what they do? But here's why I'm gonna stay away from this one. If you look in the top right, just the market cap, the whole company is worth 2.2 billion. So the valuation you're paying is 2.2 billion. Well, if we look at the net income, they've lost well over 200 million dollars. So just in the past year, so they've lost over 10% of their market cap in net income just the past year. We really want to see this net income start to, trend up positive. The revenue's up 5. So I don't know. Actually they do have some decent revenues, 30 mil, but I'm not seeing much growth. What happened? It's just momentum right now. I think a lot of momentum people are in that name, but I'd be careful with that one. That's when you trade. I don't know if I just buy and hold that one for the long run. So let's see. Jack said GSAT. What's this one? GSAT stock. Global Star. Okay. Is that like the thing in the car? No, that's OnStar. I wonder if OnStar is publicly traded. Anyway, so this is a $3 billion company. So very small market cap. Let's see what they do. So wholesale capacity services. Look at the growth there. The growth has been very strong on GSAT. Spot revenue, not sure what that is. That's down 9. Commercial and Internet of Things up 2. So let's go look at the net income because that's what kind of matters. So the net income is a little choppy. Look at that. Let me look at the operating profit. Yeah, so not great. The cash from operations is really good though. The free cash flow has really exploded. But yeah, I'd be a bit careful with this one. Are they investing in the business or hopefully not selling assets? So yeah, they are reinvesting in the business a lot. That's good news. So it's like a mixed bag there. Yo, Applesauce. He said, is CRMD worth a look? Let's check it out. Hey, yo, German, what's up, man? No, you're all good, man. We still got another 30 minutes to an hour I'll be streaming for. But yeah, good to see you, German. So I got to show you an update. We're at a new all-time high by far today. Oh, we got to look at APLD too. So here's Core Medics. So 800 mil company. Let's see the earnings. So they beat on revenue, beat on net income, beat on EBITDA. So yeah, look at that. Hold on. So look at that revenue growth. Wow. It's up to 40 million the most recent quarter. And on that 40 million, they made 20 mil of net income. So the margins of 52%. Was that real? That was real. And they have a monster balance sheet. I'm going to add CRMD to the watch list. Hey, that's really interesting. Cash from operations was 20 mil. So actually that one's interesting. I like that one. So yeah, let's go look at APLD. So that's an NVIDIA stock. So we go to NVIDIA's portfolio because NVIDIA owns some individual stocks, CoreWeave, ARM. Then the third stock they own is APLD. So this is actually a data center hosting software play. So check this out. Most of the revenue comes from their data center hosting, but this is the main growth. It's actually the cloud business. So check this out. The cloud service revenue is up 220% year over year. So incredible growth of the cloud service business where it kind of justifies the stock price appreciation and it makes it okay that they're losing this net income. They also just had a huge partnership with CoreWeave. That's kind of why the stock gapped up on this day. Partnership with CoreWeave, and NVIDIA owns some of them. So pretty cool. CLOV stock. Hey, yeah, is that Clover Health? So yeah, let's check it out. And then we'll look at ET stock. Yo, remember to look at ET. That's an MLP though. So Clover Health. So really small name, 1.5 bill market cap. They're an insurance play. Okay. So look at the insurance revenue. It just grew by 33% year over year. Grew 43% from the previous quarter. So yeah, let's see here. Revenue up 33, and they're starting to get net income positive. They lost 93% less money than they did previously. So actually, that's really interesting. They're deleveraging their balance sheet. So actually, I can see why they've kind of rallied up so much. The financials look pretty strong on that one. Oh my goodness, dude, no. Oh my gosh. TikTok saying I'm AFK. Okay. All right, hey, we're back. So let's see here. Weeble stock. Hey, actually, BULL. So Weeble stock. Hey, what up? Good morning, David. Good to see you. Happy Friday, everyone. Yeah. So wait, what did I just click? BULL. So Weeble is literally just this app right here, publicly traded. So hey, I use their platform. I've probably given them a bunch of fees. Hey, check this out. We're up 16% all time. Haven't really outperformed the market, but I just like being fully transparent. Hey, what up, Mo? Thank you so much, man. Yeah. Here's my big winners in here, though. Those are my losers, UiPath. Then we got some winners like Dave. So we've done a lot of trading in there. But here's their stock publicly traded. And let's see. There's not too much history because the company did just IPO. But yeah, look at this. They actually made net income in the two most recent quarters, 12 million, 10 million. So that's the good news. And the revenue's up 31. So yeah, this is a net income positive company. And I think they'll probably end up trading like a Robinhood one day where they kind of follow crypto and stuff. And yeah, I use them. They have a nice app. I do like the one I'm on more though. But yeah, I know they're getting a lot of new users and stuff. A lot of the younger investors like to use Weeble. So all right, let's see. DCTH has been kind of disappointing. Thinking of putting on CRNB. Hey, yeah, I can understand that. Yeah, DCTH is one I'm just holding on. Yeah, we're down 2.77% on them right now. Yeah, these are the three small caps I bought. GHM, we're up 8. Innodata, we're up 45. And TSSI, huge winner. We literally bought this stock like week or two ago. We're up 40% on them. So they're pretty cool. And we're also at a new all-time high in our main taxable account, my main Robinhood account. Yeah, look at that year to date. We're up 12.6%. We're up 0.87% on the day. Everything appears to, everything's green right now. Crazy. A lot of that's also from United Rentals. They had phenomenal earnings, and that's why they gapped up so much. So United Rentals has been a really good performer. Anyway, let's get back to the stock analysis. Oh yeah, ET. I want to look at Energy Transfer. This is an MLP though. So first off, if you're going to buy this stock, they're actually not a stock. They're actually called units because if you own this stock, you buy some of this, you're technically a partner in the company and they send you a K-1 tax form. So if you're okay with that, and I'm kind of not, because my first year investing, I bought a stock like this, sent me a K-1 tax form, had to pay $200 with an accountant to get it filled out. Wasn't fun. So don't buy the stock if you don't know what you're doing. But because they're an MLP, a master limited partnership, they have a 7.3% dividend yield. So, and it's actually sustainable. They own a bunch of natural gas pipelines and oil pipelines. So yeah, pretty cool. Oh, David said TMC, the metals company. Yeah, so this is that startup that basically is making these robots. And hey, Cookie, thanks so much for the rose there. Yeah, we'll look at Palantir. I got you, man. Give me 1 second. Thanks so much, dude. So here's the metals company. I wouldn't buy this stock right now, but it's because they're a startup. They have no revenue. They've never sold anything. And here, I'll just show you that. So go to the revenue down here. It says no data because they've never sold anything. And so naturally, they're losing net income every quarter. But here's the thing. They make these robots that they're going to go underwater and suck the nickel and aluminum out of the water and potentially gold as well. So they're like a rare earth mineral play, but it's tough. I mean, super leveraged balance sheet, still no revenue. So we want to finally see them have some real revenue. So yeah, let's go look at Palantir. Sorry. Yeah, we're looking at this one again. I do apologize, but hey, Cookie with the donation, I appreciate you, man. So Palantir stock all-time high today, absolute monster of a performer. Most of the revenue comes from the government. 55% from the government. A lot of police stations use Palantir in their software. And let's see how it's growing. I think it's up 45% year over year, literally to a new record. So government revenue is growing like crazy. They're making net income every quarter, and they have no debt. Literally debt-free company, $6 billion of cash. So that's why they kind of deserve the high PE. I just do think the valuation is still too high for me, in my opinion. 120 price to sales. So we're not doing a multiple on the net income, but a multiple on the revenue. So it's tough paying 120x. I mean, they'd literally have to more than double every metric to make it look somewhat not crazy. So what's this app called? Hey, Evan, this is a brokerage right here. If you want to get this brokerage I'm on, it's in the link tree in my bio. Very first link there. It's where I like to buy stocks and also do analysis on stocks on. So let's see right here. Have you seen Costco? You know what? Let's go analyze Costco because I love this stock as well. Who doesn't love Costco? $1.50 hot dogs. Costco just switched from Pepsi drinks to Coca-Cola. So Costco now serves Coca-Cola products. But the thing is with Pepsi is consumers, when you go there, you feel like you're getting a good deal. You're buying stuff in bulk and you have to pay a subscription to get in. So Costco makes, monthly revenue from the subscription. And look at this net income. They're making literally 1.9 billion plus of net income every quarter, and it's growing double digits. So, I just love Costco and their business model. Valuation's high. Yeah, but they always trade at a high valuation. You also get a nice 0.5% dividend yield there. I actually own kind of one of their competitors. I own a healthier grocery store. If anyone's heard of Sprouts Farmers Market, that's the grocery store that I own. So I got 7 shares of them. Yo, IXRN. Thanks for the rose, man. No way. Yeah, if you got a stock you want to look at, let me know. Oh, he did. He said, what's a good buy spot for American Superconductor? Yeah, we'll check them out really quickly, or we'll look at a price for them. So American Superconductor, honestly, under $40 would be a pretty good price. I mean, again, $1.8 billion company. I feel like there's still more upside. I don't mind buying some stocks at all-time highs. And also, they're super growthy. Revenue's up 60% year over year, and they're making net income. So I would probably look around that $40 level. That is huge news. I'm going to drink a ton more cola now from Costco. Hey, what up, West Side? Good to see you, man. And Joby Aviation. Yeah, so Joby, I think this is a company owned by, was it Honda? Or let me check the shareholder. So, no, it's Toyota. So look at this. For Joby Aviation, the largest shareholder is actually Toyota. So Toyota Motors sees something in this. Obviously, they wouldn't just put huge money in something. They got to be up like crazy on their position. But here's what I'd be careful of. They're still a revenue-less company. They have not revenue-less, but 55,000 of sales. Lost 82 mil and 250 mil last quarter. So but the stock price appreciation has been incredible. I mean, I think they got some contracts with some the government. I don't know. So I got to do more research on them. I don't know why they ran up so much. So, user 14 said Cameco. That's CCO. This is my favorite uranium play. So actually, let me show you. If you're interested in uranium, you just pull up the ticker symbol URA ETF. So here's the URA Global X Uranium ETF. Uranium's at an all-time high thanks to the favorable nuclear regulatory environment. So the largest share of this ETF is actually Cameco, 25% of it. And look at Cameco. This is a Canadian company, and they're at all-time highs. So right now, we just stopped buying our uranium from Russia. We used to get a lot of uranium from Russia. Now we get it from Canada. And Cameco is a huge beneficiary of that. We'll switch the revenue to US dollars just for fun there. But yeah, look at that. Half the revenue comes from uranium, so or 45%, which is pretty cool. And the net income is starting to really pop off here. So yeah, Cameco, nice uranium play there. Let's see. What's this app? Yeah, hey, see, this is a brokerage right here. If you want to get this brokerage, I'm on. Link tree in bio, very first link there. My favorite app for analysis. Yeah, Archer Aviation's another one. Yeah, Archer Aviation, that's another revenue-less company. So, Archer Aviation, yeah, this is another startup. I think Kathy Wood owns a bunch of this stock. So, Stellantis is actually the largest shareholder. So, Stellantis owns Jeep, I think Dodge as well. So Jeep and Dodge Oh yeah, and there's ARK. Yeah, ARK Investment owns 4% of this. So Archie Aviation, this is another revenue-less contract company. So if we go to the revenue, it says no data because this company has never sold anything before, and they're losing over 100 mil a quarter. So for me, this is one I'm just staying away from. I want to see some revenues first. Like, if I'm just going to buy a company and hold it for the long run, I would just that one's obviously performed well, but I'd look for one that has a bit of a better financials. Robert said, any Ripple IPO news? Ripple, that's a crypto. I don't know any news about that, man. But let me know if you find anything. You speak my language, dollar signs. Hey, what up, Matthew? Yeah, hope you guys are having a good Friday, man. I'm having the best Friday ever. I mean, Comfort Systems, my largest holding out of any stock, is up 21% on the day. I'm just happy. So, I mean, hey, up $118 per share today. That's nuts. And also, United Rentals had really good earnings. Yeah, they're up 20% the past month. So yeah, here's my main taxable account. Yeah. Yeah, thoughts on Figma? Yeah, the Figma IPO is happening soon. Let me pull it up actually. FIG. So they haven't IPO'd yet. So they're IPOing at around $25 to $28. So, I could get in on this, but the thing is, yeah, look at that. Look at the second line there. I'm aware of the flipping policy. Investors selling or flipping shares within 30 days may be restricted from future IPOs. So basically, if you buy this at IPO price, you can't sell it for 30 days or they're going to restrict your account. So what you should do is maybe wait for it to IPO, like to say the same, 10 minutes and buy the shares in. I don't know. So, that's kind of the thing with Circle. If you bought the Circle IPO, you couldn't, and they had an incredible IPO, you couldn't really sell your shares for 30 days. I mean, and that sucked. But it didn't really hurt you because the shares are still doing good. Like this stock literally IPO'd at $30 and then went up it's at $200 right now. So it's a very successful IPO. Oh, by the way, Circle, the stock I just looked at, is the stablecoin issuer for USDC. So any small one you can recommend right now? Yeah, hey, what up, Castro? So my favorite small caps that I'm kind of investing in right now are these three right here. And they're so risky that you cannot put a huge amount of money in them. But GHM, DCTH, and TSSI are all worth under $700 million each. And actually, if you go to my second most recent YouTube video, it's called 3 High Growth Stocks I Just Bought. I go into full details on why I just bought all three of these. So if you're really curious, hey, so if you want to support me, just check out my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert and watch that video. I'm also streaming on there as well, so if you want to watch the stream from YouTube, that I'd love that. I really appreciate that. TikTok keeps like banning my account. Yo, IXRN, I didn't even see that. Dude, he sent like 10 more roses. Thank you so much, IXRN. Thank you, man. You got another stock you want to look at? Let me know. I missed the Circle IPO. Yeah, what up, Trends? Nathan said, it's okay if you get restricted, you just won't be able to get into another IPO. Yeah, I think it might be worth it at that point, Nathan. You own Circle, it goes up 200%. It might be worth that. Yo, what up, X? Beanie says, take one trade. What do you mean, man? Hope you're having a good Friday, though. Yeah, what's up, Matthew? Were you in on the Hood run? Well, absolutely, but I wish I was more in Robinhood. Robinhood actually is my best performing stock of all time, and I regret every share I've ever sold. But check this out. We're up 660% on Robinhood. And if you're wondering, when did you buy those shares? Well, here's an unsuccessful IPO. Robinhood IPO. Look how long ago, man. This is so long ago. But this is where I bought my Robinhood shares. All I had to do was just hold on for 3 years, and then we'll finally get some returns. So, hey, Robinhood's just such an innovative company. A lot of people signed up for Robinhood Gold. It's printing them net income, so. Yeah, hey, thank you, IXRN. Yeah, hey, by the way, I don't sell anything. I don't have a course, a book, a Discord. I'm just on here to give my opinion. But if you do want to support me, hey, YouTube channel is called Nathan. I'd literally rather you subscribe to my YouTube channel than donate $1. So thank you. All right, let's keep going here. What's the best broker? Hey, I have a YouTube video on that too, but I think it's this one right here, Moomoo. Best free, lowest fees, best analysis tools. It'd be this app I'm on right here if you want to get this brokerage. Link tree in bio, first link. I missed the CoreWeave IPO. Yeah, dude, actually, let me go to NVIDIA's portfolio real quick. The reason the CoreWeave IPO did so good is because NVIDIA bought the dip on them. So yeah, CoreWeave has also kind of been puking, but CoreWeave bought CoreZ, which is a huge Bitcoin mining company. So here's the thing that's really growthy about them. Besides the fact NVIDIA owns a bunch of them, look at the year-over-year revenue growth. Revenue is up 420%. It went from 188 million to literally 980 million in 1 year. I mean, incredible revenue. So they're just really growthy. All right, let's see. Yeah, what up? Okay, Nose. What's up, dude? So someone said HCTI. Carl said HCTI. Let's check it out. So healthcare triangle. So yikes. So again, we don't like to cover these kind of stocks on here. If you look in the top right, the market cap, the whole company is worth 29 million. So that's just such a small market cap. It's hard to really trust them. Let's see, and they're losing over $1 million a quarter. Revenue's down bad. I mean, look, the revenue used to be 11 million, and in the most recent quarter, it's 3 million. So it's got to be careful with that one. Just very small name. Pelican said SES stock. What's this one? So SESAI stock. So looks like another really small one, $400 million company, but we'll be quick. We'll quickly analyze them. Look at that revenue growth. Actually, the revenue is really strong, although it's comparing from small numbers. 5 million the most recent quarter, but that is good news. And they are still losing 10 to 30 mil a quarter. And see, look at that. Whenever you lose net income, that money has to come from somewhere, and that's why you see the balance sheet kind of just assets go down every quarter and quarter. But luckily, they have the cash to get them through this. Let's see. Yeah, 240. Yeah, see, the cash is down 25% year over year, but they have 240 million of cash, so they can easily afford all these net income losses for at least a couple more years. So, and I think they'll probably get net income. Well, I don't know anything about this company, but hopefully they'll get net income positive in a couple years. So actually, they're all right. I got to do more research on them, but they don't look too terrible. Do you invest in companies you don't support? I stopped supporting Robinhood during the whole GameStop thing. Yeah, hey, Brian, I get that. At the time, Robinhood is now a publicly traded, mature company. And to be honest with you, I've looked into the whole Robinhood disabling the buy button or sell whatever on GameStop. It was kind of, they got a little call from their daddy Citadel, and that's why so anyway, so it wasn't entirely Robinhood's fault, but I get that. So, and I actually do some companies that I don't believe in their ethics, I won't invest in them. You're right. Like here's one that I know people don't love, but someone just said it, and this is one of my largest holdings is McDonald's. A lot of people think like, oh, unhealthy food and stuff, and I get that. But McDonald's is actually a royalty and real estate company. You go spend $100 at any McDonald's, $4 of that goes back to this parent company as a royalty. We're up 7% on them. You're not going to probably outperform, but this is like literally such a safe stock. It's a recession resilient stock. In 2008, this company didn't dip when every other stock dipped 50%. McDonald's actually in 2008 opened a bunch of new stores and acquired a bunch of land for cheap and during a recession. So anyway, let's keep going here. Let's see here. Let's go look at some more stocks. According to you, which crypto coin has potential to grow until 2030? I would just say Bitcoin, because I don't own any crypto, by the way. So I'm not the person to ask about that. I love stocks. So yeah, we'll look at Rocket Lab and Futu. Yo, Ash. We'll look at Futu and Walmart. Yeah, we'll look at all these. Yeah, what's up, guys? Hope you're having a good Friday. And WPM. Yo, remind me to look at WPM. Sorry, I didn't get to that one. I want to get to these. So let's see. So here's Rocket Lab. First off, very growthy company. My favorite space stock. I wouldn't buy ASTS, Space Mobile. I'd buy Rocket Lab. First off, they have a huge backlog, a literal $1.5 billion backlog of orders that they haven't fulfilled yet. And look at the Space Systems revenue growth. It's up 45%. So very growthy company. They also just acquired another company for $500 million. So the growth is going to be even more. So Rocket Lab, I like that one as a growth name. I don't know if I'd buy them right now at all-time highs, though. But here's a stock that I do own in my Webull account. So if we go over here, yeah, it's been such a good performer, just like Robinhood. But this is a Robinhood competitor, Webull stock competitor. This is FUTU, and they are printing money so much so that they're now paying these special dividends. They can easily afford these special dividends. So if you're wondering what is FUTU stock, it's actually this app that I'm using. This is my favorite app. If you look in the very top, it's called Moomoo, and FUTU next to the ticker symbol, it says Moomoo. So this stock we're going over is literally this app, this brokerage that I'm on right now. And by the way, if you want to get this or download the app I'm on, it's in the link tree in bio. First link there. It's a little affiliate link. But anyway, I want to show you the financials here because it's really incredible. So first off, if we go to the PE right here, oops, hold on here. Actually, I disconnected it. There we go. So if we go to the PE right here, the PE is a 27. So that's a very fair PE ratio. I mean, 27 PE. And look at their users. Their users are now 26.3 million, up 17% year over year. Their client assets are at 106 billion. And it's good to know that they're extremely profitable as well. Look at that. They made 275 million of net income just this quarter in US dollars, up 108%. So incredible net income growth. Revenue growth's up 82. Nice special dividends. So yeah. Oh, what up, Adrian? Yeah, happy Friday, man. Happy Friday, everyone. Uh, then let's look at Walmart, and then we'll look at WPM. And we can look at a Tesla too. Tesla reported very bad earnings, and the stock is now up like crazy. So I have some questions about that, but your most favorite stock? Which one are you visiting? Yeah, hey, X. That would be FIX stock, and I'll show you it right after this. But here's Walmart right here. Walmart is also hopping in on like the Costco trend. They own Sam's Club. Sam's Club, let's see. Yeah, look at that. Sam's Club, 14% of the revenue. So if you go buy or if you want to get into a Sam's Club store, you also need a subscription. So you have to pay a monthly subscription, which is cool. And you're buying stuff in bulk, so consumers get a good deal. But anyway, it's Walmart. We all know them. And look at this net income they're printing. I mean, $5 billion plus in net income every quarter. So just ridiculous. And they still have a nice 1% dividend yield. Actually, if you go to the shareholders right here, if you look at the Walmart family, oh, that says Walton family. I think the Walton is still the Walmart family. The NVIDIA CEO, the NVIDIA Jensen Huang is richer than the entire Walmart family. Crazy, just how much NVIDIA has done so good. But yeah, let's go look at WPM, then we'll look at Tesla. So what's this one? Wheaton Precious Metals. So yeah, the precious metal stocks have been going nuts ever since the MP Materials deal with the government. So Wheaton Precious Metals, let's see what they sell. So these are the mines that they own. So they might be in the gold industry. So these are all, I like how diversified that they are. Let's see, their largest one, Salobo. Look at that growth, up 105% year over year. So crazy. And if we go over here to the balance sheet, I mean, this is an absolute, just beast of a balance sheet. I mean, literally no debt. I mean, the liabilities are so little, you can't even see it. Let's see how much cash they have. 1 billion of cash, record amount of cash, net income of 250 mil. So yeah, I can see why that one's doing so good. So DTSS, because you also show the shareholder section. DTSS, yeah, we'll check that one out. Then we'll pull up Tesla. So yeah, Tesla's interesting. I'm not sure why that stock is up. So let's see. Data C, he said go to the shareholders. Well, here are the shareholders. I was trying to pronounce it, but I don't think I'm going to attempt to pronounce that top name there. Zixin Liu. Anyway, I'd be really careful with this stock. I mean, actually, the revenue's kind of exploded, up 600% year over year. But what was the market cap? Yeah, $16 million company. Yikes! I didn't know it was that small. Let's go look at Tesla now. Oh yeah, we can look at BJ. Yeah, we'll check out that stock too. So here's Tesla. Yeah, look at that. They're up 3.7% on the day. I wonder, is this the news right here? Tesla emerges as top performer in assisted driving tech test in China. So against competitors like BYD. Man, BYD has been eating their lunch. But anyway, here's kind of the bad news. Their earnings were really not good. So if you look at the revenue year over year, the revenue fell 11%. So they kind of lost the growth. Revenue's down 11, but look at this operating profit. It was down 53%, or 58%, just like last quarter. It fell 58% last quarter, fell 58% this quarter. So it's really tough. They actually had a little bit of net income shenanigans. So the EPS, it says the EPS is down 15%, but it should really be down like 40%. Yeah, EPS is down 17. It should really be down like 40, but that's all good. What was the free cash flow? Look at the free cash flow, man. I mean, these are not good numbers. The free cash flow fell 90%. For a Mag 7 stock to be doing this, I mean, obviously I get it. The market cap, huge growth from the future is going to come from the robo-taxi network, but the growth is gone for the automotive segment, at least for now, down 13% year over year. And I don't mean to be, being bearish on Tesla is not the popular opinion. So Again, I'm not an expert. Can you show your portfolio holdings? Yeah, hey. Also, if you go to my YouTube channel, most recent YouTube video, you can see what stocks you own. But yeah, like I was saying, my favorite stock, my most largest holding is in FIX, and this is why today is a great Friday. I mean, look at this right here. So, oh my goodness, I just realized the title is Stock Earnings Live. Oh my goodness, that is terrible. Let me change it really quick. Oh my gosh, it probably sounds like button mashing. Hold on, because the mic is so close. That's why the YouTube stream has been doing terrible. The YouTube stream is titled Google Earnings. Oh my goodness. Okay. Hey, thank you to everyone on the YouTube stream. But yeah, anyway, sorry. Let's get back to the analysis here. So yeah, sorry about that. So let's look at BJ. So yeah, doesn't stand for what you think. This is actually this is a grocery store right here, and the grocery stores have just been a really good performing sector. And let's see what they're doing. So the net income is, look at that, yeah, 150 million plus in net income every single quarter. So really good net income there. No dividend on BJ, but yeah, the grocery stores have been performing really good. So yeah, this is just a grocery store, kind of like a Kroger, a Walmart, a Sprouts Farmers Market. So yeah. Hey, no way. Dead Squad, he says I made my day. I'm so glad, man. I hope you're having a great day. uh, really appreciate you for teaching this. Hey, thank you, Matthew. Yeah, I just try and just give out the best information. You know, I don't sell nothing. I don't have a course. I literally sell nothing. No course, book, Discord, WhatsApp, Telegram. Make sure you don't or you make sure you watch out for people impersonating me. There's so many people impersonating me. So if you follow me on TikTok, you might get followed by a scammer, which sucks. But yeah. And also, I have my other portfolios. Yeah, hey, if you go to my YouTube channel, it's called Nathan Robert. I'm streaming on there as well. The stream's been performing terrible since I had the wrong name. So if you want to support me, go watch the stream from YouTube. But you can see my entire stock portfolio update. Just made a video about it. Roth IRA is at an all-time high as well, man. I love the Roth IRA. Roth IRA is a tax-free retirement account that like if you double your money on a stock, it's actually tax-free in the Roth IRA, which is cool. So Zone 2 all day said CLS stock. So this is Celestica. The stock is at an all-time high right now. So first off, congrats if you own this one. You know, you got to be up on your position. So let's see. So connectivity and cloud solutions. So this is really good right here, the growth here. So if we look at the revenue year over year growth, it's up 28%. And also they had like a huge spike of revenue right here. So they had a really nice little spike of revenue. So let's check out the net income though. So yeah, they are making net income every quarter, like 80 to 100 mil. It did fall year over year. The sales did rise. So still really profitable company in a really popular industry. BJ's is just like a Costco. Yeah, they're like a wholesale. Yeah, I saw that. You're in so much. Yeah, hey, yeah, dude, today is so good. Here, I don't mean to show this to brag, but yeah, my portfolio is literally, since the day I started investing in this account, which was May 30th, 2023, we're up 107%. And if I just put all my money in the S&P 500, I'd only be up 52%. So it's good to know that since I'm an individual stock picker, I don't own the S&P, I don't own any ETFs, but it's good to know that since I stock pick, it's good to see that I've been performing pretty good. Adrian, that's funny. He says VJs are usually private, not public. Unfortunately, got a dip. Gonna take my little bit. Hey, have a great day, Death Squad. Yeah, happy Friday, man. Hope you're having a great day. If you want to hit the subscribe button, we go live. I try to go live every day. So yeah. All right, let's keep going here. Oh, I feel bad if you own this one. So this is Plug Power. This is an EV charging company, and I'd rather buy Tesla, to be honest with you. But here's why you gotta stay away from this name. Just look in the top right. So this whole company is worth $2 billion. So you can buy into this company at a $2 billion valuation, and here's what they're doing. They lost $200 million just in the past 3 months. So they've lost 10% of their market cap in the past 3 months. That kind of explains why this stock is at an all-time low. There's huge bankruptcy risk here. Like, how is this possible? How do you lose $2 billion or 1.3 billion just last quarter? I mean, that's not great. So this is just not the kind of company you want to own, in my opinion. I mean, just think about it like logically. Companies worth $2 billion. You buy the whole company at $2 billion, and you buy it at that valuation. You're buying a company that's currently losing, 10% of that. Anyway, you kind of get the point. GBIO, is it worth a look? Happy Friday. Be sure to say, hey, thanks, squad. I appreciate you, man. Is GBIO worth a look? Well, check it out. How do you get your info? Yeah, hey, Brian, I'm using a brokerage right here. It's in the link tree in my bio, first link there if you want to get this app I'm on. Do you have a set schedule at work right now? Been loving your stream. It's the best background video. Hey, Anthony, I don't have a specific schedule, but I try to stream every day. I always stream after 12. Yeah, actually, these are usually my peak hours, probably in Eastern time from like 1 p.m. to 4 p.m. Right around whenever for you the market closes. Usually before the market closes, sometimes after. Sometimes I'll do midnight streams too. I frequently stream twice a day. So anyway, yeah, here's Generation Bio. I'm not seeing anything here. $31 million company at all-time lows. $31 million company, and they lost 15 mil this quarter. So this is even worse. They literally lost half of their market cap in net income just this quarter. Even though the sales are good, I mean, they're small, but the revenue is up 114%. I mean, dang, they're leveraged up. I mean, I can see why they're not doing too well. So yeah, I'd be careful with that one. Let's see. Thoughts on Ford earnings next week? Yeah, man, Ford, first off, you're just not going to outperform the market if you own Ford. I feel bad if you own this one. Ford is lower than they were in 1999. So you bought the stock in 1999, you're down on your position. But the main reason you're buying Ford is really for the dividends. So check this out right here. You buy Ford, you're getting 6.5% of your money back in a dividend every year. So assuming it's sustainable and they keep it, 53% payout ratio seems fair. Let's see. So, I mean, we're waiting for next quarter's earnings report. But yeah, they're making a couple $100 million to $1 billion a quarter. Yeah, close to like 900 mil a quarter. If you have only 1K to invest, is it worth it to put it toward any stock? Absolutely, man. That's how, dude, I remember if you go to my YouTube channel and go old enough, my account was like $800. Like when I first started investing, my account was like a couple hundred. It was like a $400 Moomoo account. And I just slowly invest every month. So what do you mean leveraged up? Yeah, the balance sheet, they were leveraging up their balance sheet. Their assets were going down and their liabilities were going up. So yeah, anyway, let's keep going here. ASML stock. Ooh, good time to buy UNH. Yeah, we'll check. Dude, I think it's a good time to nibble on United Health. I do think so. So here's ASML Holdings. This company had phenomenal earnings. I mean, the earnings were just amazing, but the thing that made the stock go down is the bad guidance. They basically showed no growth for next year. So that's the bad news. And that's why the PE is kind of the lowest it's been in such a long time. Look at that. PE is a 25. 25 PE for ASML. That seems really fair. And the earnings were phenomenal. Like, look at this. The revenue's up 35% year over year. Net income is up 86% year over year. What does that mean in English? Basically, they're growing their net margin, 35% net margin in the most recent quarter. Stellar earnings, deleveraging their balance sheet too. They have a 1% plus yield. So ASML, I do like this one, but the guidance is what's hurting them. So I do wonder what'll happen. Maybe they gave low guidance on purpose so they can easily beat them and buy back their own stock at the same time. I've seen companies do that, but anyway, usually stocks don't intentionally crash there. Anyway, let's look at United Healthcare. Yeah, what up, Ash? So yeah, United Healthcare, I do think it's worth a nibble. I mean, it's collapsed over 50%. So at this point, I mean, if the whole company has lost 50% of its market cap since the peak, is the revenue and the net income going to fall 50%? I really don't think so. So there's just a lot of future uncertainty. Regulation is not in their favor. Obviously, they don't want the Medicare and Medicaid providers making as much profit. So that's why the PE has really collapsed here. But if they don't get kicked out of Medicare and Medicaid and the financials stay pretty similar, even if the net income and revenue falls 15 to 20%, still actually a pretty good valuation to pay right here. And you get a nice 3% yield. So, hey, nice dividend on that company. So I do think it's worth a nibble. Again, not a full-size position, but a nibble, like a quarter of a quarter or something. Just got 100 shares of PM on the dip. Hey, this is actually the first stock I ever bought. The first stock I ever bought in my whole life was ticker symbol PM, Philip Morris. I don't own them anymore, but this is a great oil and gas company. So let's go see how they're doing. So first off, you get a nice yield here. Yeah, wait, this is not, wait. I'm thinking of Phillips, dude. I'm so stupid. I'm thinking of Phillips 66. So the stock I meant, that's why I was saying oil and gas. I was actually talking about Phillips 66, but this is Philip Morris. Okay, sorry. This is a completely different company, but you also have a nice dividend yield here, a 3.35% dividend on PM. Pretty cool. PE is a 30. They've been seeing a lot of growth from I don't know if it's called Zen. I don't know. But anyway, yeah, the net income's pretty strong. Yo, try not to spam. Hold on here, guys. Sorry about that. I don't got any moderators, so I got to do this myself. Okay, let's keep going here. Yeah, try not to spam, man. Crispy said, great call on TSSI. I'm up 25% since you mentioned it the other day. I only bought a little. Yo, that's actually, you did the exact right thing. You only bought a little. That's kind of the correct thing to do. And so did I. Check this out. I got 5 shares of them. And dude, man, I'm up 37%. They're up 5% on the day. Really good performance there. So yeah, these are all 3 really small companies worth like 600 million. How do you see that so quick? Do you look at the debt rev ratio? No, I just look at the asset to liability ratio. So it's the orange line there. So here, like, actually, I'll show you Comfort Systems. Here's what I'm talking about for the guy with the balance sheet. So if we go to the balance sheet right here, look at last year. You see the orange number at the very left. It says 64%. That's the asset to liability ratio. And now in the most recent quarter, it's only 61%. So their assets are growing and their liabilities are going lower. So you really want to see that go down and down. That's great news. Anyway, let's keep going here. Favorite fintech stock? That's a buy right now. Hey, it'd probably be, I love SoFi, but I don't think SoFi is a screaming buy right now. Here's an underrated hidden gem that I'm going to recommend you put this on your watch list. I wouldn't buy this one right now, but add this stock to your watch list. I have not found a company this impressive in a very long time. And this is what I really look for in a company. I don't own this one. I do not own this stock. But check this out. This is Sezzle. They're a fintech, financial tech. And here's the best part. Look at the revenue. The revenue has doubled. It went from 46 mil to 104. So the revenue is more than doubled. It's up 123%. And look at the net income. So the revenue was 100 mil, and they made in net income the same quarter, 36 million of net income. The margins are ridiculous. A 34% net margin just in the most recent quarter. I mean, this is a really good one. Look at that. It's so impressive. You see, last year, the balance sheet was so leveraged. Like the liabilities were really close to the assets. Well, now look at it in the most recent quarter. It's only at 57%. So anyway, SEZL, I put that one on the watch list. So yeah, yo, what up, Mick Kenzie? What's up? Hope you're having a good Friday, everyone. So let's keep going here. OPTT stock. We'll check that one out. OPTT, Ocean Power. Yeah, so this isn't really a company I like to cover on here. This is a $100 million company, so extremely small market cap. They're down 16% on the day. So yeah, they're worth $100 million and they're losing $5 million a quarter. So I'd be careful with OPTT. You know, nothing really blowing me away there, to be honest with you. Yeah, Lulu. Hey, so sorry. I just seen you gave me a rose. I really appreciate that, Lulu. If you got another stock you want me to look at, let me know. I got you. We'll check it out. So someone said, what should I invest in? So again, I'm not an expert, but the safest thing to invest in is just the S&P 500, ticker symbol VOO. This should be like the backbone of your portfolio. Did y'all know the S&P 500's been up 5 days in a row? It's been 5 green days in a row. So absolutely incredible performance on them. Let's see the SPY right here. So yeah, or the SPY, you know, there's multiple S&P 500 ETFs. So let's see. Yo, what up? It's yours, said NVTS. So yeah, this is Navitas Semiconductor, which had a huge partnership with NVIDIA. So before that partnership, if you look at the stock, there was real bankruptcy risk at this stock right here. They were at all-time lows, only worth $1.50, but then huge rally right here after NVIDIA, huge partnership with them. So they just got saved by NVIDIA, because if you look at the revenue right now, it fell 39% year over year. So that's not good growth. You know, revenue's down 39% year over year. And look at the net income. I mean, they're kind of losing a boatload of money. Look at that, like 20 to 30 mil a quarter. So yeah, good thing NVIDIA stepped in. So URA. Yeah, hey, Chris, that's the uranium ETF right here. So if you're looking for exposure to uranium, this is the ETF to like diversify you through all the individual stocks. I mean, Cameco's great Canadian uranium provider. That's 25% of the ETF. UEC right here. UEC bought a uranium mine from Rio Tinto. So yeah, that's the uranium ETF, URA. I just got some OPTT when they were doing their industry. It's interesting. Oh, really? Speaking of Lululemon, speaking of Lulu, hey, I was talking about maybe it's Lolu. Thanks again for the rose for the heart there. I appreciate that. But yeah, let's look at Lululemon Athletics. Dang, look at Lululemon just keep on bleeding lower. So they reported earnings, they fell on earnings, and then fell for another 10 days in a row, and now bringing that back. So yeah, Lululemon's been a tough one. Let's check them out. They sell like the like uh, leggings and shorts and stuff. And look at the PE. The PE is a 14, so that's a really cheap valuation. I mean, I think that's the lowest valuation it's been since 2009. So the PE is really dog cheap. We can see their number of stores. Hey, this is pretty cool. Let's see, number of stores. They got 770 stores. Pretty nice. But here's why Lululemon fell, and I think at this point it's probably oversold. I think they're pricing in the worst. But look, if you just think about this logically, the revenue of the company increased 7%. So your revenue went up 7%, but your profits, your net income fell by 2%. So what does that mean? It means the margins are falling, not great. And I don't think investors are happy about that. What app is this? Yeah, hey, Harshi. This is actually a brokerage that I'm using right here. If you want to download it, it's in the link tree in my bio, the very first link there. So yeah. Hey, Blue414, what up, homie? He said DY in stock. So Dyne Therapeutics, another really small one, 1.3 bill company. Stock's been flat since 2027. So, or wait, what? Or no, 2017. So yeah, since 2017. So nothing's really blown. Dang, no. Look, dude, they're losing 100 mil a quarter. This is not good. So, yes, I'd stay away from this one just because of these staggering losses. I mean, they have a good balance sheet, but man, 100 mil a quarter for a $1.3 billion company, that's risky. They need to fix those losses. So, oh, hey, someone said Fiserv, or what up? Rose said Fiserv, ticker symbol FI. Yeah, let's check that stock out. Hey, no way, Blue414 with the 50 roses. There's actually no way, Blue414. I really appreciate you, man. Hope you're having a great Friday. Hope everyone's having a great Friday, by the way. So here's Fiserv stock, and dang, yeah, they gapped down on earnings. Not good. So let's go look at the earnings and see if we can figure out what happened there. So they're a merchant stock. So they slightly missed on revenue, missed on net income, and slightly missed on EBIT. So they triple missed, but not by that much. I mean, they missed by like 3% or something. So for them to fall this much, it might be oversold. I don't know. Maybe they gave bad guidance too. I don't have that. But the guidance could be really bad too. Yeah, the PE is a 23 now. So interesting. Fiserv. Let's see. What is Coin? Yeah, hey, IXRM. What's up, dude? He said Coinbase. And yeah, we'll look at this right here. What are roses? Hey, no, hey, someone on the YouTube stream said, "What's a rose?" It's like a donation. Someone just donated me a rose on TikTok, so I appreciate that. Yeah, if someone ever donates a rose, I'll always check out your stock. And I don't usually like to say that because I don't want any donations. I just appreciate y'all being here. I sell nothing. I don't sell a course, book, Discord. I'm just trying to give my opinion. The best way to support me, I'd rather you do this than donate me a rose. Go subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm streaming on there as well. And let's go look at Coinbase though. Sorry. So Coinbase, obviously we know their platform, and this is a cool stat we get. This is their monthly transacting users. So not just users, but active users that are transacting monthly. They have 9.7 million of those. So that's huge for Coinbase. And look at this net income right here. I mean, they're ridiculously profitable, especially with the new stablecoin regulation that's helping them. Like, look at this net income. You have to kind of average it out, but they're making a couple $100 million of net income every quarter. So very profitable company on Coinbase. And yeah, the new regulation, like the Genius Act, the stablecoin regulations are great news for them. Yo, what up? Cuban said CHRW. So hopefully this isn't a micro cap stock. We'll check it out. So actually, let's see, a $12 billion company. So that's actually a pretty good market cap, but the stock has kind of been flat for a while. Stock has been flat since 2019, but let's go look at their financials because that's what matters. First off, you do get a nice dividend. You get 2.4% of your money back in a dividend every year, which is really good. The PE is a 25, low PE. But what about the net income? So, wow, the net income's up 45%. So the revenue fell 8%, but the net income still grew. So they're still able to grow their margins in this slower or negative growth revenue environment. And yeah, look at that, 58%. I mean, still a 3% net margin, but hey, that makes them 100 mil. Anyway, they're interesting. I don't know. Probably won't outperform the market, but you get a nice dividend, low valuation. Yo, Seaview said Rolls Royce. Yeah, that's RYCEY. So a lot of people know Rolls Royce for the cars, but Rolls Royce is actually an aerospace and defense company, and they've had some incredible stock price appreciation. So congrats if you own them. I believe they're an EU company. I don't know if they're American, but look at where the revenue comes from. Civil aerospace. They make jet engines. Look, 24% of the revenue comes from defense, power systems. So very diversified revenue streams. And for the entire year of 2024, so full year 2024, they made $3 billion in net income. So very profitable company. So yeah, they've had a nice recovery. They were almost going to go bankrupt. So someone said STEM stock. STEM stock. So we'll check it one out. Then I want to go back and look at the market real quick, see how the market's doing. Dang, yeah, this stock's at an all-time low, 100 mil. Yeah, I won't really cover this one. 100 mil company lost 25 mil this quarter, and they've lost more than their whole market cap and net income. Anyway, let's go back to the main account right here. So we're up 0.82% on the day. Not too shabby. What about the S&P? So yeah, S&P 500 is up 0.5%. We're at right now, new all-time high ever, new intraday high, new all-time high on the S&P 500. And year to date, the S&P 500 is up 8%. And what are we up year to date? We are up 12%. Hey, dude, I still can't believe this April dip. We were down 15%. All you had to do is not sell. If you bought anything, you did amazing. But if you just didn't sell anything, you also did amazing. So yeah, let's keep going here. What's up, bro? See Google waking up. Yeah, Sermon, we got to look at Google too. They just had really good earnings. And yeah, the stock held its gains. Great news. We're up 19% on Google. Great buy and hold forever stock. I mean, such an innovative company. It looks like the ChatGPT isn't taking as much market share away from Google search as people were really pricing in back here. So great news, I think, for Google. And still, even right now at $200 a share, Google's trades at a 20 PE. I mean, that's really fair for a Mag 7 stock, a 20 PE. And again, I think it has the ability to stretch up to like a 22 or 23 PE and send this to a $220 stock. And it wouldn't be ridiculously overvalued, 20 PE. But anyway, here's kind of the good results. The revenue grew 13% year over year. So pretty solid revenue growth, up 13%, but the net income grew 19%. So another company expanded their margins, 30% net margin, grew 5%. So yeah, Google had really good earnings, and also from the Google Cloud business. And this is updated. This is 2025 Q2, and the Google Cloud revenue grew 31%. They own so many businesses. Like they own Waymo, they're in quantum chips, they're in YouTube, Google Search, Google Cloud, cybersecurity with Wiz, Waymo. I mean, Google's like an ETF in one. So, hey, IXRN, dude, no way. Thanks again for the 2 roses there. I appreciate that one. Yeah, for everyone, Google is super cheap. So that's why I think they can, go up to that 22, 23 PE, send it to all-time highs. That's just one you want to hold forever as well. Google also pays a really good growing dividend too. So Google is the one stock that makes no sense. I think the reason Google is so cheap is because like 40% of the revenue comes from their search advertising, and if like ChatGPT, basically Google, and it's not always like this, but sometimes like it's use it for an encyclopedic purpose to like find information on Google, and people will now just go to OpenAI and ChatGPT instead of Google. So that's why the PE is so low. But I think they're pricing in like the worst, or they were. So anyway, let's go look at Uber right here. So Uber Technologies, hey, what up? We'll look at Qubits, Okta, and NEM. I want to get to all these right here. The DOJ case. I think the DOJ investigation. I think they're just already naturally losing their market share. If ChatGPT never existed in OpenAI, they would definitely have to sell off Google Chrome or something. But now that they're like market share, and the market already sees that there are not really a threat. They're not a monopoly anymore. You can get your encyclopedic information from any other ChatGPT. So I think they're kind of in a good spot in regulation wise. But sorry, let's go back to Uber, man. Uber, this company is so innovative. I mean, they just bought 1.2 billion of cars from Lucid. Those cars were also powered by NVIDIA's software, which is cool. But anyway, let's check out Uber. Active users here, 170 million monthly active users. Mobility revenue, delivery revenue. That's like Uber Eats. This grew 17% year over year. So really good growth there. And look at this as well. The net income and the free cash flow are ridiculous. Like, you know how they just bought 1.2 billion of Lucid cars, or that's how much the value of them, the orders are. Well, they literally made 2.25 billion of free cash flow just this quarter. And they don't pay a dividend, so they can do whatever they want with this free cash flow and reinvest it in the company. And same with net income. Look at how the net income's over $1 billion every quarter. So, yeah, really good. Yeah, hey, we already looked at those stock user. We might look at ONDS in a little bit. What's up, man? Sorry if I don't get to all the comments here. I do apologize. I do try and get to the most of them. So NEMPE is way lower. Well, let's check out NEN. So this is Newmont. So an 11 PE, $72 billion company. So let's go find out what they do. So yeah, you get a 1.52% dividend. Not too bad. So I think this, Nevada Gold Mines. So this owns a bunch of mines, I guess. That might be why the stock is doing pretty good. Gold has done pretty good recently. So you kind of get exposure to gold and a yield at the same time. Look at that. Wow, $2 billion in net income just this quarter. That's incredible net income. So yeah, exposure to gold and other stuff with the lower yield. Hey, Beanie said Apple stock. Yeah, dude, we haven't looked at Apple yet. Let's check them out. So AAPL. Yeah, we can look at NICE and Reddit stock. Yeah. Bro, why people buy stocks in all-time highs? But no. Yeah, Gamma, sometimes the market just continues to hit all-time highs. But not buying before today hasn't been the move. Like the market was at an all-time high last week in the week before. So it's tough, man. Like some perma bears are being formed. Not in the chat, but I mean, it's so weird the market ran. I agree. I don't know how the S&P 500 has been up every single day this week. I mean, I didn't expect that. So let's go back to Apple here. Apple, I'm on an Apple device right now. Best product they'll ever make is their iPhone. iPhone is half their revenue. And also, look at this huge market share. Their smartphone market share is a 19%, so pretty crazy. So they have the iPhone revenue, then the services revenue. So if you go buy something in the App Store, they take a 30% fee on that. So you go spend like $10 on Clash of Clans gems. Well, they're taking $3.33 of that as a royalty basically back to them. And also they're in Mac, wearables, iPad. So here's also why they're affected by tariffs pretty more than I thought. Did you know only 36% of revenue comes from the US? I always thought it was like more than that, but that shows how internationally diverse they are. Like though Apple's headquartered in America, they're an international play. 25% of the revenue comes from EU. 17% comes from China. Everyone loves their products. So anyway, yeah, they do have earnings soon, so that'll be interesting to watch. You also get a nice dividend. They also have the biggest buyback program of any company. They spend $100 billion a year buying back their own stock. So yeah. Wait, let's go back here. There was a stock I wanted to look at. Yeah, Reddit. Hey, Reddit. I do own that one. Let me pull that up for you. So here we are on our Webull Risk On account. So we do own 4 shares of Reddit. I think this is a probably $200 stock. And hey, thanks for the TikTok cap. No way, IXRN. Thanks so much, man, for the cap, dude. Thank you, man. We'll check out Neo after this for sure. So here's Reddit, though. Here's why I love this company. First off, extremely growthy. Like, I don't know how Reddit pulled this off, but revenue grew 61% year over year after growing 48% from the last quarter. So incredible revenue growth, and they're making net income on that. So in the past 3 quarters, they've made net income every quarter. And look at this fortress of a balance sheet. They actually have no debt. They're literally a debt-free company with $1.95 billion of cash. So yeah, Reddit's just been doing great. And I do own them, so I might be biased, but yeah. What are the main things you look at when analyzing a stock? Yeah, hey, Jacob, you'd love my YouTube video. It's called how I analyze a stock. It's on my YouTube channel called Nathan Robert, but I love I always judge them by the financials and the fundamentals. Like here's actually a stock that thanks again IXRN for the cap. He donated a TikTok that I really appreciate that, but this is unfortunately a stock I would not recommend. This one it's not great. So I'll kind of explain why. If you look in the top right, you see the market cap, $11 billion company. So the whole company is worth $11 billion. And check this out. Just in the most recent quarter, they've lost $930 million. I mean, pretty much $1 billion this quarter and last quarter they lost. So that's 10% of the market cap. It's tough. I wanted Reddit, but it's too expensive. Yeah. I'm in Reddit put credit spreads. Oh, no. Hey, Reddit credit spreads. That sounded weird to say. I do like Reddit stock because they're literally debt-free, growing. But yeah, Neo I don't love just because of these net income losses. They're also Chinese company, losing $1 billion a quarter. And yeah, so they're also diluting you when the stock's at all-time lows. So be careful. So KP said, look at TLSA. Wait. He said not Tesla, but TLSA. So let's check it out. So 200 mil company, very, very small market cap. So $200 million market cap, but lost 11 mil. Hopefully they got revenue growth. They have, that's from 2009, bro. So yeah, this company does not sell anything right now. So a revenue-less company, I lost 10. Yeah, I don't know. I'd be really careful with that one. Got to do more research, but nothing's really blowing me away there, to be honest with you. So yeah. Added Main to my portfolio. Thoughts? Hey, it's cool with me. I also own some Main Street Capital. So Main Street Capital is one of the few companies that actually pay monthly. What the? Okay. So they actually pay you a monthly dividend, which is pretty cool. And they're one of the few stocks in the market that does that. So you're mainly buying this to like maximize your dividend income. But also, this is one of like a dividend growth stock. Like if you notice, the stock is pretty much at an all-time high right now. So I'm up 18% on them. But yeah, you get the monthly dividend. I own them in my Roth IRA too. So the dividends are tax-free. Let's go. So Honest. Hey, Balto, what's up? Said Honest stock. So yeah, this is a diaper and wipes company that is debt-free. So this is some of the good news. So they're a $500 million company. So $500 million market cap, very small. And they have no debt. So completely debt-free and $72 million of cash. That's actually a record amount of cash. So $70 million of cash, no debt. And they're just now getting net income positive. It's been choppy for a while, but look at that. They made $3 million the most recent quarter. As long as they can keep that up and make a couple million a quarter, I mean, look at that. Like that's kind of the hope here. You pay $500 million for a company that's hopefully going to make you a couple million every quarter. So yeah, I could kind of see the future there. But again, they just sell a commodity. Diapers, wipes is like 70% of the revenue. FIX is up 22%. No way. Dang, dude, FIX stock just keeps on winning. So yeah, congrats if you own this one. I do. It's my largest holding by far now. Let's keep going here. Oh, SoFi stock. Hey, yeah, let's check out SoFi. Try not to spam here. Yeah, we'll get to BBAI as well. I don't like that one actually. BBAI has lost over 10% of the market cap and net income past year. So but wait, let's go back to SoFi because I do love that one as a fintech. So I think BBAI is just a meme stock right now, meme momentum play. So here's SoFi though. This one, a lot of people think SoFi is a meme stock, but no. This one has real good growing fundamentals. So where it makes the stock price appreciation justified. Like I'm looking at BBAI and some of these other stocks. There's no reason for them to be going up so much, and they're just going to dump down in the future. I can almost bet. But here's SoFi right here. Here's their financial services revenue. This is incredible growth. I mean, literally up 101% from the previous year. Yeah, is SoFi a long-term investment? I think so. SoFi is a stock you probably just want to buy and forget about it. But over $20, I don't know about that. Seems a bit expensive. But if you do buy them, just hold it for the long run. You could trade it because they are like a fun stock to trade because they're so high beta. But I would just buy and hold that one. And that's kind of when you buy and hold a stock, that's where you start to get like massive returns. I've trimmed my SoFi position and I regret every share I've ever sold in them. So If I go back to my Webull portfolio right here, we're up 256%. I mean, the average person would have sold it probably at like an 80 or 100% gain. They would have sold off all their shares. But the secret is you got to keep it after it goes up so much. Like Robinhood, man, up 656%. I sold so much of the shares way lower. Anyway, let's keep going here. Yeah, SoFi is a cool one. The financial services growth is just huge. They have their own banking charter, and people are starting to take SoFi serious. They're making net income every quarter. I mean, that's the best part. They've made net income every quarter. When if we zoom out, they used to lose net income every quarter. So they've really turned things around. Yo, Podjim said MSTR. So yeah, they changed their name from strategy or from MicroStrategy to just strategy. So here we go. MicroStrategy, they bought some more Bitcoin today, I believe. But yeah, MicroStrategy, this company, as we know, just owns a bunch of Bitcoin. So we want to go to the balance sheet down here. That's what, if we're wondering, like, what are all those assets? Why is it going up so much? Well, that's because they diluted the shareholder by a bunch and just literally just bought Bitcoin with that. So all those assets are just the Bitcoin that they own. So yeah, the stock just moves with Bitcoin. It's almost seen as like a leveraged Bitcoin. Whenever Bitcoin goes up 1, sometimes they go up like 1.5% or something, a little more. But yeah, you can do options on it and stuff if you want. How's BBA a meme stock? Have you not seen the projects there? I have not seen the projects, so I'm not sure what Big Bear AI is doing actually. So that's fair. But yeah, here's the stock right here. The stock's done really good. And here's the one thing that I'd be careful with. Like, look in the market cap in the top right there. The market cap is 2.1 billion. So 2.1 billion of market cap. And in the past year, they've lost well over 200 million of net income. So not great losses, but and what's the growth here? So, and the revenue's up 5%. So yeah, probably they'll have some future growth there. Well, let's see here. Yeah, dang, they also just missed on their whenever they reported earnings, they missed bad on their expectations. They missed by crazy on the net income, missed a good chunk on their EBIT as well. So let's hope they don't keep that trend up of missing earnings. But yeah, that's why I'm just staying away from BBAI. I don't know. They could have some nice, really nice future growth. I miss AIQ. Oh, I forgot to look at that one. Let's check it out, man. Sorry. AIQ. Oh, this is actually an ETF. So wow, look at that. So this ETF is pretty much at an all-time high, just like the S&P 500. And this is the Artificial Intelligence and Technology ETF. Pretty cool, actually. And wow, their largest holding. I love this stock. This is Tencent. If you're wondering what is Tencent, man, this is like the largest game company. They own Riot Games. So this stock right here owns League of Legends, Valorant, Riot Games. They own Supercell. So they own Clash of Clans, Clash Royale. They also own PUBG. If anyone's heard of that, like PlayerUnknown Battlegrounds. They also own 50% of Fortnite. I mean, this is just a game conglomerate, Tencent. So yeah, they're a really cool stock. And Palantir, Oracle, Samsung. How's Samsung? Can we view them? No. Dang. But anyway, yeah, I like those holdings. I like a lot of those names. Yeah, that is really cool. So let's see here. Path. Oh, I want to look at this one actually. ARSLF. So actually, ARSLF. Yeah, I typed that in, Blue 414. Unfortunately, I cannot find that stock. I do apologize. But we could look at UiPath too. This is one of my biggest losers of any stock. So I'll show you my position after this. But the growth has been pretty not good. So they're growing single digits, like 6% year-over-year revenue growth, 4% year-over-year revenue growth. Not really great. And the net income's, choppy. I mean, they're still not consistently making net income. The CEO just quit out of nowhere as well. So I'm not adding more to my position, but I'm not selling it as well. I'm down 41% on them. So, Super Microcomputer, I want to look at them too. Yo, ALD said, what app are you using? Yeah, hey, this is a brokerage right here. If you want to download this app I'm on, it's in the link tree in my bio, very first link there. It's a brokerage, yeah. Oh, and also, yeah, let's look at Qubits. So, what up, Adrian? So, yeah, Qubits, this is the quantum stock. So, last time they reported earnings, they had a really good beat. So, the orange line is what the analysts were expecting. They were expecting 10 million of revenue, and they reported 15. And next quarter, they're only expecting 2 million of revenue. Like, that's crazy. Next quarter, they're only expecting 2 million of revenue. So I think if they beat, like, it's easy to beat that. Like, if they get like $8 million, let's say, it's going to look like, they just beat on revenue by 400%. So I again, still the market cap is pretty overvalued, but this is your quantum momentum play. It's remember, yeah, ALD it is. Yes, sir. Yeah, if you want to get this brokerage I'm on, it's called Moomoo. I have an affiliate link in the link tree in my bio too. So if you want to support out the channel, I'd appreciate that. So, oh yeah, let's go back to Super Microcomputer. Yeah, so that's one I do own as well. Actually, let me pull that up. So Super Microcomputer, they just got a huge $10 billion contract deal from Datavault. So that's why the stock gapped up this day. There's no earnings this day. It was literally just the news that they got a $10 billion deal from Datavault. So that was the good news around Super Micro. And I own this one. I bought this stock back when they were having a bunch of filing issues. So here, I'll show you my position, actually. It was a great buy the dip opportunity. Wow, I'm up double on them. So we're up 103% on Super Microcomputer. Let's see. Yeah, I bought it all on this day right here. Yeah, the little V-shaped recovery. So again, with these riskier kind of stocks, you don't want to have a huge chunk of your portfolio in them, but a little small position is fun. Yeah, like a SoFi, a Supermicro, Reddit, PSIX. Does anyone remember PSIX? I mean, you want to have like small allocations to these stocks. Do we really get to? You get up if you deposit, you get like some stocks, and yeah, basically you get like if you sign up for this app I'm on. Actually, I can't say it on here. Basically, you get 5 free stocks if you deposit $100 on here. Oh, Steve, you said GLW. Yeah, anyway, if you want to get this app I'm on, my favorite app, recommend one for analysis and stuff. Link tree in bio, first link there, affiliate link. So it's just this app I'm using. So let's look at GLW right here. So let's see if I can pull up this stock, hopefully. GLW. And dang, we've been streaming for over 2 hours now. Yeah, we'll probably be live for another 10, 20 minutes. So if you guys got any last minute stocks you want me to look at, let me know. Then we'll do a stock portfolio update. So here's Corning right here. Wow, this stock's at an all-time high. So yeah, congrats if you own this company. So they might be in the home builder industry. I don't know. Probably not. So yeah, optical communications, display revenue, specialty materials, automotive, Hemlock. So first off, I like how diversified their revenue streams are. So, not just one product selling it all. And look at that. Only 39% of the revenue comes from the US. Then China is a big exposure in other countries. So let's check out net income. So it is a bit choppy, but still, if you average it out there, they are still making over 100 mil a quarter. Yeah, you kind of average it out there. They're taking over 100 mil a quarter. So yeah, so GLW, they're interesting. Well, they pay a dividend, 2% dividend too. Hey, nice. Do you sell or take out loans on the stocks you own? No. So yeah, I don't ever recommend someone take out margin. You're basically taking out a loan to buy stocks, and you have to pay usually 7% plus on that. So basically, if you're taking out a loan for 7% a year, it costs you, and the S&P 500 returns like 8% a year. I just don't recommend margin. Look at that. This app like begs me to use margin, but I never do. Like they'll let me buy like 14,000 of stocks, but I never would. And you have to really go out of your way to use margin. Like if I wanted to buy Comfort Systems here, I'll show you this. We go to the buy order. Usually says max to buy with margin. I could buy 15 shares on margin or 1 share with my cash. So yeah. Anywho. I've never taken out a single dollar of margin ever. So let's keep looking at stocks here. What is Bybit? What's your biggest investing regret? Selling out of some great companies selling great companies. That's kind of the biggest regret, selling out of great companies. And, like Robinhood, for example, man, I lost, I took a lot of profits on them at the wrong time. So, sometimes your biggest regret will be, obviously I have some losses, but these losses are what really teaches you to be a good investor. So that's why I don't really so much regret some of these huge losses, because it really taught me how to find good companies. So, all right, let's keep going here. We'll look at Zeta, and I want to look at Adobe first. So I looked at Adobe, then we'll look at Zeta, and what's the best stuff for me to buy right now to make? I don't know, Emmanuel, about a guaranteed profit in 3 weeks, but if you would, the S&P 500, not financial advice, pretty much guarantees, 7-8% a year on average if you just hold it for a long, long time. EV Spartan, no way, dude. Thanks so much for the roast there, man. If you got a stock you want me to look at, let me know. Random question said, what app? Yeah, hey, this is a brokerage. It's in the link tree in bio. First link there, random. It's a brokerage called Moomoo. First link in the link tree in my bio. So here's Adobe. I'm on an Adobe product every day, like Photoshop, After Effects. So, hey, subscribe to my YouTube channel, Nathan Robert. link tree in bio. But anyway, look at the valuation here. I mean, it's actually dog cheap. I mean, a 23 PE for a huge software name, that's really cheap. But the reason the PE is collapsing is because of the thesis. Because right now, the financials are incredible. This is also kind of why Google's PE is really low. Is the thesis is hurting them. Like I know someone, they needed a logo and they literally made it in ChatGPT. And ChatGPT made this incredible logo that you wouldn't even tell was AI made. And it will hurt Photoshop in the future and After Effects if we maybe don't need it. So yeah, here's still for right now, they're printing net income. Look at this, 1.6, 1.8 billion in net income every quarter. So ridiculous profits. I mean, they could try and maybe buy some other companies. Who knows? They have the money to kind of innovate out of this, and also $2 billion of free cash flow a quarter with no dividend. They don't pay a dividend, so they're doing insane stock buybacks. If we look at the stock buybacks on Adobe, they buy back like a ridiculous amount of stock buybacks. You're going to do an after-hour stream, maybe applesauce, maybe. If y'all wanted to, if y'all want to hit the subscribe button, hit the follow button, I'd appreciate that. Seaview21, thanks for the rose, dude. I really appreciate that. So let's look at Zeta. What up, Catherine? How's it going, Happy Friday. Happy Friday. When do you sell? I sell when I sell if I think it's overvalued, and if I think it's overvalued and it's gonna go lower. I don't always do it, but it's actually a lot of factors, to be honest with you. So anyway, let's look at Zeta Global right here. So Zeta, this one is really falling off a cliff, like off their peak, but I do think the valuation makes sense here to actually start a little nibble, not a huge position, but a nibble. So look at the revenue. It's really good growth. So revenue's up 35% year over year to a new record. So really good revenue growth, and the net income is so close to getting positive. So they lost 45% less money than they did last year. They made net income last quarter, which is really good. So probably by this time next year, they're hopefully going to be making net income every quarter. They're deleveraging their balance sheet. Wow. So everything in Zeta is headed in the right direction. So, yeah. Oh, I missed the WPM analysis. Yeah, hey, you know what? I got you. Thanks for coming back. We'll check it out again. We did analyze them, but let's do it again. So this is Wheaton Precious Metal. I believe this is a gold company. So they just own a bunch of gold mines. So if we go to where the revenue comes from, these are the mines that they own. So I like how diversified that it is. 51% comes from Salobo, or however you pronounce it. And look at the growth here. It's up 101% from the previous year. So really good growth on WPM. So also, revenue's up 250 million in net income. You get a dividend, so you get exposure to gold with a nice dividend too. So pretty cool. Do you ever sell covered calls? Not really. Just not. Selling calls hasn't been the move. Like there's covered call ETFs, which I used to own. I used to own a lot of covered call ETFs, but then I sold it because it was just underperforming the market. Like the S&P 500. Do you really want to sell calls on something that's supposed to go up 8% a year? Or like the, what's that one called? Like MicroStrat? No, MSTY or something. Basically, that sells calls on Bitcoin, and Bitcoin's at all-time highs. It hasn't really been the move to sell calls on Bitcoin, but that's also why the yield is so high. But I do like the covered call strategy, and I recommend if you want to sell calls, you do them yourself instead of getting a covered call ETF. So, no way, EV Spartan. Thanks again for the rose, dude. If you got a stock you want me to look at, let me know. Last minute stocks here. What happened to Baba today? Did Alibaba fall? Let's see. I know it's a Chinese company. Yeah, they're down a little bit. So, yeah, here's Alibaba. It says their debut new open source AI coding model. So, okay. Well, let's go look at the financials here. Alibaba is pretty much the Chinese Amazon. So, yeah, the PE is pretty fair. A 16 PE, not exactly ridiculously overvalued. And look at this net income. I mean, they're making a couple billion every quarter. It's really strong. So, I do like the net income here on Baba. Yeah. So I don't know what happened to them today, but yeah, they're like Chinese Amazon. They own AliExpress. Do you like ETFs like EVD? Yeah, I love ETFs, man. Ticker symbol QQQM VOO. This is the NASDAQ 100. If you want, never, in my opinion, don't buy the QQQ. Buy QQQM. It's the exact same NASDAQ 100 strategy, exact same holdings and weightings and everything, but with a lower expense ratio. You probably never heard of it because the people at Invesco like to promote the QQQ ETF and not the QQQM, because why would you promote this one? because it makes lower money. So anyway, yeah, here are the top holdings, same as the NASDAQ 100. So yeah. Let's see. HCTI. What's HCTI? Let's hope it's not a small company. HCT. Oh yeah, Healthcare Triangle. Yeah, this is the company worth 28 million. Yeah, be super careful with that one. We don't really cover those kind of stocks on here. So, um, WSB. What is that one? I can't find that stock actually. Yeah, apparently that WSB. I can't find that stock actually. That's weird. So, KP said ARM stock. Yeah, if we go to ARM, that's actually one of NVIDIA's largest holdings. So if we go to NVIDIA's portfolio right here, check this out. Their largest holding is obviously CoreWeave, and then they own a lot of ARM. And ARM collects a lot of high margin royalties. It's really a royalty, like a licensed software play. Actually, if we scroll back out to their revenue, look at that. This is older, but 58% of the revenue comes from the royalty revenue, and then the license and other revenue. So that's really cool. 40% of the revenue comes from the US, and then Taiwan, China, all the other companies. But yeah, they're making a lot of money. Check that out. Like 200 mil a quarter. Oh, well, yeah. Hey, I just stay away from that. Anyway, they're making a couple hundred mil a quarter, which is good news. So yeah, the PE is pretty high though on that company. They do trade at a pretty high valuation. But yeah, we'll look at we'll look at this last one here, LLY. So Eli Lilly, this company owns a bunch of prescriptions, as you probably heard of Eli Lilly before. And here's what they sell. So they own Mounjaro, they own Zepbound. Zepbound has been a crazy performer. This is like the Ozempic competitor, the weight loss prescription they sell. And look at the growth, dude. Like literally this time last year, it was 175 million of revenue. Now it's 2.3 billion just in the most recent quarter. So incredible growth, up 300%. It's like it's 10x. So, and same with their largest selling product, their Mounjaro. Look at that one, up 112%. Redonkulous growth there on Eli Lilly. So I love the growth there. We actually want to look at the operating profit. They're making literally 4 billion in net income a quarter. So crazy good company. So yeah, really good growth. So yeah, let's been on Eli Lilly since 2017. Yeah, hey, nice, dude. That you must be up a bunch on that company. So anyway, I want to kind of wrap up the stream here, give a last portfolio update. And yeah, by the way, if you wanted to follow button, we go live every day. And I sell nothing, no course, book, Discord. Watch out for people impersonating me. You follow me, I really appreciate that. You might get followed by a fake account. But yeah, let me give you a portfolio update. This is my main taxable account. We're actually at an all-time high in here today. And this is where I buy dividend-only stocks. So every stock in here pays a dividend, but these are kind of dividend growth companies like a Google, Meta, McDonald's, United Rentals. So these are like dividend growth companies. And we also have our Roth IRA, which is also at an all-time high today, up 21%. Hey, let's go. Wish I put more in here. But yeah, these are all the stocks that we own in here. TSSI has been a really good performer. Same with InnoData, if anyone remembers that one. And then we also have, of course, our Moomoo portfolio right here. This is our buy and hold portfolio. If you look in the top left, it's called buy and hold portfolio. Once I buy a stock in here, I try not to ever sell it. And like, look at Comfort Systems. This stock's at an all-time high, up 21% on the day. I'm not selling any shares. I'm keeping all my shares. I'm not even trimming. But yeah, I haven't sold any. I did sell out of one. I did sell out of Nike in here a while back. But yeah, Coca-Cola Consolidated also reported earnings today. I really like this stock as well. I've been DCAing into that one. But yeah, and then we also have the Webull Risk On account. So check this out. If we go to all time, we're up 16% all time in here. So not really outperform the market. You know, we have some losers in here, obviously UiPath, Zoom. I just like being fully transparent. I'll show you my winners and my losers. Yeah, Talhead, I feel that way with so many stocks. I wish I bought more shares. And yeah, here are all the winners in here. So yeah, that was the stream. By the way, the best way to support me, if you want to support me, go subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. You can just type into YouTube, Nathan Robert. Hey, thanks, Applesauce. Yeah, have a great Friday, everyone. If you wanted to follow on, we'll be live later today. And if you want to get my favorite app, if you like want to start investing, I guess, my favorite brokerage is actually this one right here. If you look in the middle of my screen, I keep my cash in here. It earns daily interest. It has the best analysis tool. So if you want to get this app that I'm on right here, it's called Moomoo. It's in the link tree in my bio, the very first link there. It's a brokerage. It's actually an affiliate link too. So if you go and deposit $100, we'll both get some free stocks. You'll get 5 free stocks and I will too. So anyway, yeah, you get so much cool metrics here. You can see where the revenue comes from, the geographical location of where it comes from, the net income and everything. Literally every metric you'd ever need is on this app right here. So anyway, link tree in bio, first link there is my affiliate link. And anyway, see you later. Hope you have a great rest of your day. Hey, Matthew Payne, thanks for showing up, brother. Have a great Friday, everyone. Tune in for the next stream. So yeah, hey, see you later. We just ended the TikTok stream and now we'll end the YouTube stream. See you later, Matthew. Thanks for showing up and hit the subscribe button. I try to do this live all the time. I'm trying to build my YouTube community because it's a little small. My videos don't get too many views.